Hi, my name is Bob Ichino. After 12 years developing a system which last year generated a 73.3% win rate and beat the S&P 500 by 254%, I've decided to share my story. I urge you to keep watching because I believe 2021 will be a crucial year for all of us. Rewind about 20 some odd years. I woke up that morning with a terrible headache. The pain was absolutely unbearable. And while I was on the verge of one of the biggest years of my trading career, there was just no way to focus through that kind of pain. I remember how my wife whispering in my ear, "Do you want to go to the hospital?" felt like a sledgehammer to the side of my head. A few hours later, after vomiting from pain, my wife rushed me to the hospital. A long afternoon of painful tests later, and nothing. Nobody could tell me what was wrong. They pumped my body with painkillers, scheduled an MRI, and sent me home. Fast forward to Easter weekend. My wife and I would drive to my mother's house to spend the day with her and my father. I woke up that morning and I couldn't see out of my left eye. It wasn't dark, but more as if someone placed like a white sheet of paper over the left side of my face. I kept it to myself, thinking it would just clear up. I was wrong. I knew the situation was far too serious for me to continue hiding it from my wife. Once I told her, she forced me to pull over and drove me to the nearest hospital. Just like last time, test after test showed nothing. This time, though, they immediately sent me to get an MRI. And the following morning, my doctor said the scariest 5 words you'll ever hear. You have a brain tumor. It's very difficult to describe what you feel and what you go through when you hear those words. For me, the typical thoughts of family and friends and how much time I might have left flooded into my brain. But something else hit me as well. Work. My trading career had been moving along in big ways. From my early days on the CME, Chicago Mercantile Exchange trading floor, for working for Japan's 3rd largest brokerage house, to a new role at Smith Barney, who had just bought the brokerage house. My success to that point hinged on one thing, my brain. As you can probably imagine, it felt uniquely cruel that the thing I relied on the most was now literally in a position of killing me. I didn't know it at the time, but it was a blessing in disguise. I'm not going to bore you with the details now, but the important thing to know is the brain tumor devastated my pituitary gland. The pituitary gland is no larger than a pea, and it's often referred to as the master gland of the human body. One of its functions is to control what's known as the stress response. Harvard Medical School puts it this way: as the initial surge of epinephrine subsides, the hypothalamus activates the second component of the stress response system, known as the HPA axis. This network consists of the hypothalamus, the pituitary gland, and the adrenal glands. There's a very complicated neurobiological response your body goes through when confronted with fear or stress. In fact, this process literally alters how you behave. It's this process which makes some people freeze in the face of danger or jump into action. So what does that mean? Well, in a very real way, I have no physical sense of fear or stress. In other words, the biological changes which alter how you think and process information under stress no longer happen to me. Let's say you've been afraid of heights your entire life. Now imagine waking up one morning and being able to stand on the top of the Empire State Building without a care in the world. How would your behavior change from that point forward? What would you do knowing you wouldn't physically feel extreme stress or fear? Well, that's precisely what happened to me. Now, intellectually, I know if I'm in danger or not. But unlike most people, my body doesn't trigger the stress response when faced with stressful situations or emotions. What does this have to do with trading in the stock market? Well, if you're in the stock market, you fall into one of 2 groups. You either give in to your emotions and follow the crowd, or you ignore the crowd and gain from others' fears. Everyone likes to think they're rational and dispassionate when it comes to trading. You've likely heard the advice of not getting emotional when it comes to trading. Whether by coincidence or not, my trading and investing success skyrocketed after my ordeal. And due to my own natural curiosity, I needed to find out why. I came across an interesting study out of MIT, which found a clear link between emotions and trading performance. The more intense the emotions, the worse the performance. And there's more. According to a popular trading platform, 80% of traders lose money in just 1 year, and the median loss is 36.3%. Here's another troubling fact. A North American Securities Administration Association survey concluded 70% of traders will lose nearly all of their money. You've likely heard legendary investor Warren Buffett once say, "Be fearful when others are greedy, and greedy when others are fearful." That's great advice, but most people can't do that. And in fact, it's not even your fault. Most people simply can't control the stress response and the biological chain of events which occur. The fact is, this neurobiological response happens automatically, and it alters the way you think. In most cases, this is a good thing. It's your natural fight or flight response. But when it comes to trading, it's completely harmful. Which is why over the last 28 years, I've been developing a system which removes the emotion on your part. Not only have I seen with my own eyes the danger of being too emotional with the markets, I've also experienced how much more successful I've been since my tumor. I began fully running this system with real subscribers back in March of 2020, and here's a quick snapshot of the results. Plus 18.97 in March, plus 4.51 in April, plus 3.98% in May, plus 3.81% in June, minus 3.4% in July, but plus 10.86% in August, minus 2.72 in September, and then again plus 4.30 in October. Add to that plus 7.15% in November and plus 4.19% in December. That's a cumulative return of 62.79%, which is 254% higher than the SPY, which is the most actively traded ETF that tracks the S&P 500 index. Keep in mind, I'm not talking about theoretical backtesting like some people try to pass off as real results. These are the real published alerts and the results from the system. As you can see, we had 2 losing months, but the losses are small compared to the wins. That's how the system is designed to work. See, even though we have an over 70% win rate, the reality is all trading systems have some level of risk, and all systems generate losers. However, taking this emotionless approach, we've been able to keep the losses to a minimum. Even more important, I'll explain in just a minute how using this system will be even more important in the year 2021. This approach could transform your trading results and lead to life-changing results. And by results, I mean a greater than 70% win rate and beating the overall market by 2.5 times in 2020 alone. As I mentioned earlier, I started my career in 1992 as a phone clerk on the CME trading floor. I wasn't very good at it. I struggled in the early years, and I was a horrible trader when I first started. But then I started to gain confidence as I began to understand the markets better. Then in 1996, my brain tumor changed everything. It gave me, honestly, an unfair advantage because I was finally able to remove emotions from trading. For me, this was very much literal. Over the next decade, my career completely transformed. I went from the Chicago trading pits to some of the biggest banks and brokerage firms in the world. I worked at Smith Barney and at Germany's Commerzbank. I ran my own commodity pool at a Chicago-based trading firm. I was a principal and a member of the investment committee for a very successful hedge fund of funds. And the list goes on and on. I've also done over 2,000 interviews dealing with the markets, where you may have seen me on CNBC, Bloomberg, Fox Business, Yahoo Finance, TD Ameritrade, and so on. Through all of this, I discovered a very simple truth. Trading is hard, and anyone who tells you otherwise is being less than truthful. It can be an expensive roller coaster ride of emotions. When you're on a winning streak, you feel like you're on top of the world, but then you make a few bad decisions and it's all gone. Months of hard work and profits gone, sometimes in just one day. I'm sure you've been there. It turns your stomach. You feel dumb, like a failure. Maybe your position was too big. Maybe you didn't cut your losses. Maybe you just held on and hoped the market would turn around. The bottom line is your emotions got in the way. It happens to everyone. Trading can be nerve-wracking, and sometimes it can get even worse. Take 2001, for example. At the time, I was running a trading desk for Commerzbank Futures. Back then, it was the third largest German bank in the world. The day started off as usual. I was on the CME trading floor with other traders, Peter Ori on my left, Paula on my right, when suddenly the phones lit up like a Christmas tree. Call after call came in, rapid fire, just one right after the other. The pit erupted into an almost deafening roar. This was something I was used to. Anytime a piece of news would happen, hit the wires, or the Fed would make an announcement, we'd get what I could only describe as pure pandemonium. I did what I normally did. I checked our positions and our clients' positions to make sure we weren't overexposed to whatever was causing this roar, then waited for it to die down. This time, though, it didn't die down. This wasn't typical. I looked up at the giant jumbotron on the trading floor and immediately knew this would not be my typical day. A hijacked plane smashed into the World Trade Center. It was September 11th. Then 15 minutes later, another plane crashed. About 45 minutes later, an announcement blasts through the PA system on the trading floor. The United States is under attack. We're told to evacuate, but the desk I was running had a large number of trades still open. I asked anyone with kids to leave and go home to their families. For everyone else, I let them know it was up to them to stay with me as we closed out these trades. But no matter what, I'd be the last one to go. As hard to believe as this may be, I wasn't afraid. I wasn't freaking out. I was very calm. And for the first time, but not for the last time, I remember thinking, thank God I had that brain tumor. I knew the gravity of the situation, but like I said before, I don't exactly feel the fear or stress, which is why I continued to manage the trades. And the last thing I did was to close a trade that I had opened that morning, which I wasn't supposed to do. You see, the rules of that particular system said we were supposed to hold that trade for 2 business days. But this was an unprecedented event in history, and I knew that the best thing to do when you have no data to go on was to eliminate the risk. Guess what? Turns out that trade was a huge winner, and my clients made more than 10 times the money they were supposed to make on that trade. I knew the trading floor was going to be shut down for 4 days, and we had no idea what was going to happen or when it was going to reopen. Doomsday thoughts ran through everyone's mind. Will there be a full-fledged invasion? Are we safe? Will the markets crash? Nobody knew. I learned a few things that day. First, news stories and unexpected events shock and scare people. It doesn't even have to be as big as a terror attack. The fact is, most people go into fight or flight mode quickly and easily. Second, I learned anything can happen at any time, even the impossible. Before 9/11, the general public was completely oblivious to the possibility of a terror attack of this scope on our soil. What's worse is, no one can accurately predict an event like this. So what do you do if you can't predict these events? How can you safely navigate the market without big losses? Despite all the craziness in the world, in the news, and in politics, how can you consistently beat the market without great stress, without typical hesitation, without constantly watching the market and living tick by tick? Is it even possible? Academic studies going back decades prove time and time again, active traders who watch the market tick by tick have a hard time making money. In fact, the opposite is generally true. They lose money, and over time, they tend to lose all their money. The evidence also shows following the crowd is a bad idea. A recent study makes the point obvious. It examined Robinhood traders from May 2018 until August 2020. It looked at events where traders crowded into specific stocks. The most recent example of this is the craziness around GameStop, ticker GME. What they found is prices usually spike, then reverse. Usually the reversals are extremely painful, and in the case of the Robinhood study, the reversals actually became negative returns. We don't chase things like GME because, number one, I don't really feel the great FOMO that other people do, thanks to my tumor. I know the value of sticking to the process, but also because we were around for Pets.com in the crash of 1999-2000, we remember what the aftermath of these frenzies look like. Another study tracked 1,600 Brazilian day traders for a year and found that 97% of them lost money. 97%. In fact, Only 1% of them earn more than the Brazilian minimum wage. There's more. A study in Taiwan used complete transaction data for the entire Taiwan stock market over a 15-year period. Their conclusion? Less than 1% of the day trading population is able to reliably make money trading. And don't think for a second that applies to the amateurs only. Academic studies overwhelmingly prove professional money managers underperform their benchmarks over a multi-year period. In fact, a staggering 85% of professionals fail to outperform. I could keep going, but you get the idea. Making money in the markets is hard, but it's not impossible. I've spent decades in this business, and I've had only 3 down years. Now, how did someone like me, the son of Italian immigrants from the west side of Chicago, succeed for so long while the vast majority of traders failed? For me, the answer is obvious. You need a system, a process. A trading system that can consistently beat the market, take emotions out of trading, and can survive the ups and downs of the news cycle and irrelevant events. I look for this type of system everywhere, but they're not just sitting on shelves at Target. What I was looking for wasn't available to regular people like you and me. Sure, Wall Street and big hedge funds have these tools, but not us. While I was at Smith Barney or Nikko Securities and Commerzbank Futures, I had access to the best tools in the world, the best software money could buy, the types of systems you couldn't possibly imagine, but they were no longer available to me when I went off on my own. Have you ever felt like you just can't win? Well, you're 100% right. You can't win. And someone else who's much richer, much more connected, and much more powerful is winning day after day while the rest of us struggle and lose money. And the fact is, the playing field simply isn't level, not by a long shot. But that didn't stop me. It actually motivated me. I became obsessed, so I started building my system, and I did pretty well. But I couldn't do it all on my own. I needed help, and the help I needed was lurking inside the very hedge funds that I was looking to beat. After 8 years of relentless work on this emotionless system, I met a very special human being. Let's just call him Oz, the man behind the curtain. He went to Northwestern University, received a master's in electrical engineering. He's a math whiz, and he's an insomniac. During one of those sleepless nights, he created and patented a technology that helps to power red light traffic cameras. I hope that doesn't make you hate him. Later, I would learn he was the man who hedge funds actually hired to break their systems, literally. We met after Oz bought one of my courses and showed up at my live event at the University of Illinois. With around 100 people in the room from all over the country, he comes up to me just before lunch and says, "Hey, my name is Oz. I bought your course, and it's great, but I can make it better. Would you like to know how?" Now, a lot of people in my position would have likely ignored him. But not me, though. After the last session, I met up with him again to see how he could improve what I had developed. And sure enough, he actually did exactly that. The changes he made are technical, so I won't bore you. But I knew I had to partner up with him. I knew we'd develop the type of system I was after. What I didn't know back then was that was the start of what I now call the 10-stock system. My brain tumor, my 9/11 experience, meeting Oz. These events were random and unrelated, but all of them were needed to create the type of system I knew people like you and I needed. And remember, the criterion is simple. The system must consistently beat the market, take emotions out of trading, and survive the ups and downs of the news cycle and irrelevant events. Let's take that first point. The system must consistently beat the market. Take a look at the 2020 track record. I started sending alerts in March 2020, and we did as follows. Remember earlier when I told you we had 2 months last year showing losses? Well, the system is designed to be emotionless, so these losses didn't hurt us, not one bit. In fact, as you can see from the chart above, we beat the S&P by an astounding 254%. But what does that mean in real life with real money? Let's say you have a $25,000 portfolio. How does the 10-stock system compare with some of the other things you could have done in 2020? The first option is trading it on your own with no help. Could you have gotten lucky? Definitely. But study after study shows the more likely scenario is you would have taken on massive losses. In most cases, you would have lost it all trying to trade. And remember, that's not me saying it. It's MIT, popular platforms like Robinhood, even the North American Securities Administration Association saying it. In fact, according to the NASAA, there's a 70% chance you would have lost nearly all of your money. So please, even if you decide not to use my proprietary 10-stock system, do not go it alone. The risk is far too great. Now let's say you decided to put it in an S&P index fund like the SPY. You would have made $4,425, or 17.7%. And that's not bad. But had you used my 10-stock system, you would have made $15,698, or 62.8%. That's 254% more than the S&P, a 2.5 times return versus the S&P. Remember, it's the same $25,000 portfolio, but the difference in the gains is significant. And get this, you actually take on less risk using the 10-stock system than putting it into an index fund. Take January of 2021, for example. The 10-stock system returned 5.96%, while the S&P, after making new all-time highs, turned around and fell to finish the month down 1.5%. This is because we took profits all month long and had very little exposure to the downturn when it came. And they always come. And then we have the last option, which is do nothing. To me, this is probably the worst category. It gives you the illusion you're playing it safe, but you're not. The problem with the do nothing crowd is they think they're protected, but they are not. Why? Because their purchasing power is declining. In fact, it's getting obliterated. Take a look at the U.S. money supply chart. The amount of dollars in checking accounts in the banking system exploded in 2020. It increased at the fastest rate in history. Now zoom in on November 2020. Do you see the jump of more than $1 trillion? That means inflation is around the corner. Frankly, it's already here and you just don't know it yet. See, the government tells you inflation is only about 1 to 2%. That's because the government's metrics for calculating real-world inflation are at best outdated, at worst a complete fraud. I can't believe I'm about to say this because I love this country. My father came here as a legal immigrant with a green card and became a citizen, worked hard, joined the middle class. I still believe it's the greatest country on earth and I consider myself a patriot. But the way our government portrays the level of inflation to the people reminds me of how deceitful China is with its people. So if you're in the do nothing crowd, you're in a really bad spot. You think you're saving your money, but you're not. You're letting it sit in a bank account and it's wasting away at an alarming rate. You can no longer stand on the sidelines. You have to act now because this situation is only going to get worse. Let me tell you what the 10-stock system is. The core portfolio never has more than 10 stocks. And with every alert, you get the entry points, price targets, and stop losses, and any adjustments we're recommending on any open trades. In other words, each trade has a defined risk. Why? Because this hits on the second point of the perfect system. The system must take emotions out of trading. Let me show you some recent examples. Take a look at Intel. In this example, we took our profits before the drop. We made 11%, while others might have lost over 20% if they held through the price drop. And we know by studying trader psychology, that's exactly what most people do. This is one of the major benefits of the 10-stock system. By following it, you take profits constantly and consistently. While other people could be down 50% in a crash, we could be up 30% because we limited the risk ahead of time and get out while everyone else keeps piling on losses. Another strategy we use to manage our losses is timing based on price action and stop loss adjustment. We get in and out of the trades within weeks, and we raise our stop losses when needed to protect capital. In a moment, you'll see why this is so powerful. That way, when we hit our profit targets, we get out and move on to the next trade. We don't look back and wonder if we could have made more because it's irrelevant and counterproductive. Remember, the key is to remove emotion, not give into it. The reverse is also true. If the stop loss gets hit, we don't watch to see if price recovers. We simply move on. Losses are part of the game. You should always expect them because it simply doesn't matter. As you saw from the chart earlier, Our system gave us 2 losing months, and yet we beat the S&P by 254%. If you want to play this game, you will win and you will lose. And my job is for you to win more often than you lose. My system is designed to win roughly 70% of the time. The key is precise methodology combined with appropriate risk management. And based on our performance in 2020, I know this approach works extremely well. Something else to consider is that we generally look at over 4,000 stocks. And then we narrow it down through our proprietary process to about 100 to 200. And ultimately, we pick the best ones. This allows us to focus on the most profitable trades the market has to offer without wasting time with the losers. And since our hold times tend to be short, we're able to profit over and over again in a short period of time. Take a look at another trade we did in INTC, Intel, as an example. On March 18th, we got in at $45.50. We were out at $53.14 on March 24th, less than a week later. Intel kept going higher, but we do not care because we took our cash and allocated it to something else that was moving. Earlier, I talked about the timing strategy we use with the 10 stock system. Let me show you how powerful this is. Most people use a buy and hold strategy as a way of removing emotion from the equation. In theory, this makes sense, but in practice, it can actually be detrimental. Let's use these Intel trades as an example. As you saw, we traded Intel multiple times last year. But let's say that instead of trading using the 10 stock system's timing and stop loss strategies, you bought on January 1st and sold on December 31st. You'd be sitting on a 17.3% loss. Compare that to what the 10 stock system did with the Intel stock. Remember, this is the same company, Intel, as well as the same period of time. However, instead of buying and holding, we use the 10 stock system, and what you actually achieve is this. By simply following the system, you could have made a gain of 11.3%. But here's the kicker. Imagine we did this with multiple names over a full 12 months and annualize that 11.3% gain, and it becomes a 68% gain. In other words, we took what would have been a 17.3% loss and turned it into an annualized 68% gain. Can you see the power of combining this system of emotionless trading with timing and strategic stop losses? Let's look at another example, this time in Prudential. Take a look. We were in at $42.50 on March 18th and out at $54 on March 25th. Again, in a week for a quick 27.1% gain. Think about what that means. The only time your money can grow is when it's in the market. But the only time your hard-earned money is at risk is also when it's in the market. If you can pull a 27.1% gain out of the market in a week, that's an annualized return of 1,411%. But it gets even better. Had you gone with a buy and hold strategy, like in the Intel example, you would have had a loss of 17%, as shown here in this chart. Compare that to the 10 stock system, where we traded in and out of Prudential twice last year with an average hold time of 75 days, and you get a whopping 142% annualized return. Simply taking profits and limiting losses, we took what would have been a 17% loss and turned it into a 142% annualized return. Of course, not every trade will be held for such a short period of time. Sometimes we'll see a trade where it makes sense to stay in a bit longer, more like a month or even more. Have a look at AMD, Advanced Micro Devices. We entered at $85 on November 20th and exited less than a month later on December 15th at $96.85 for a quick 13.9% gain. If you can pull a 13.9% gain out of the market in less than a month, that's an annualized return of 203%. Are you starting to see why the 10 stock system is able to beat the S&P and hand you hedge fund-like gains without having to constantly watch the markets? In the case of AMD, had you gone with a buy and hold approach, you would have done quite well. The total gain would have been an annualized return of 95%. We can all agree that's a great return, but using the 10 stock system, you would have more than doubled that gain. And what's even more impressive is all of this is done automatically for you without you having to think about it. Now take a look at CSCO, Cisco. We got in on April 6th at $41.50 and got out a month later on May 5th at $40.95. As you can see, this was a loss of 1.3%. The momentum faltered and we continued to adjust our stop loss until we got stopped out for a small loss. And again, that's the beauty of the 10 stock system. We protect our downside. If we're up on a trade, we adjust our stop loss. We don't sit and watch our profits disappear. But then take a look at the very next trade, ARNA, Arena Pharmaceuticals. We entered at $51.25 on May 5th and exited on May 21st at $58, which handed us a 13.2% gain. On this trade, let's say you would have gone the buy and hold approach. Again, if you bought on January 1st and sold on December 31st, you would have achieved an impressive gain of 67.3%. Not bad at all. However, using the 10 stock system's timing and stop loss approach, we generated a 13.2% gain in less than 3 weeks. Annualized, that's a 300% gain. Another example we have from the system is EYE, National Vision Holdings. We entered at $31.50 on July 24th and exited on August 7th at $36.50 for a 15.9% gain. Had you bought EYE on January 1st and sold it on December 31st, you would have had a nice gain of 38.2%. Again, that's not bad at all. Following the 10 stock system though, we achieved a 15.9% gain in 2 weeks. That's an annualized 241% return. These are all real stocks traded with real money by our small group of members. And these are all real results. And since the goal is to be consistent over time and not take on more risk than necessary, the gains tend to be smaller. This is something I really need to stress. If these consistent winners, week after week, month after month, and year after year bore you, then this is not for you. I need to state clearly, I'm not going to hand you the next GameStop. I have no interest in that type of trading. It's short-lived, irrational, nonsensical speculation, and that simply isn't what I do. Sure, it's fun when it's all going well, but eventually that crazy game of musical chairs come to an end. The music stops, as it always does, and the reversals are some of the most painful things I've seen. I've seen this movie before, and it's a horror story for most. Personally, I do think a small, very small portion of your capital should be in speculative trades, but that's not what most people do. What my 10 stock system does is simple. It wins consistently and with well-managed downside risk. The one drawback, if you can even call it that, is the individual stock gains are smaller. However, they add up to very big wins over time, as shown by the fact that the 10 stock system outperformed the S&P 500 by 254% last year. You may not know this, but the US stock market ended 2020 on all-time highs. Despite the pandemic, despite the shaky start to the year, it broke the prior all-time high record. Remember that study I mentioned earlier? Over 85% of professional money managers rarely outperform their benchmarks. What that means is the pros didn't beat the market. At the very best, barely kept up with it. The 10 stock system outperformed the market by a huge margin of 254%. Like I said before, if consistent wins just isn't for you, I hope you get some value out of what I've shared with you here, but we're not a good fit. However, if you understand massive home runs based on irrational speculation is extremely dangerous to your financial health and well-being, if you can see the value of consistently winning on your trades all year long, then continue to watch. Inside the 10 stock system, you'll get 2 to 8 trade alerts per month. The reason for the high level of activity is what I mentioned before. The wins are smaller, but we're increasing the timing of trades for bigger gains, which is why you get those 2 to 8 alerts per month. If you recall, my brain tumor destroyed my pituitary gland, and because of it, I have no physical reaction to stress or fear. I knew from that experience I needed to develop a system that mimics those same feelings for you. Now, I can't do anything, obviously, about your body's natural response to stress, and I certainly would never wish a brain tumor on anyone. But I came up with an ingenious way to experience little to no stress when following the trade alerts that I send you. How's that even possible? All the alerts are sent out at night. You don't have to watch the markets tick by tick wondering if you've made the right decision, and you won't be distracted by intraday craziness. Right before bedtime, which incidentally is the time when the least amount of stress hormones are in your body, you'll review the alert I've sent you, punch in a few numbers, enter your trade, and then when you sleep, with a peace of mind knowing your entire trade, the entire trade, position size, risk exposure, target, profit, etc., is already set. The only thing you have to do before the market opens is make sure you're not getting in below the stop price that we sent you in the alert. That's it. If there's anyone who knows the huge advantage you get by removing stress and emotions from trading, it's me. It's this edge that's given me a winning track record for at least 8 of the last 10 years. That's why the financial news shows always call me for interviews and feedback on the markets. Even as recently as August 21st, 2020, right in the middle of a pandemic, who did Yahoo News call? I truly believe sending you the alerts this way is how you win over and over again, by setting up the trade, the entire trade, before you go to sleep, and only checking it once in the morning, which allows you to go about your day without thinking or worrying about what the stock market is doing. Remember, the way I have you structure the trade, you'll know exactly when to get in and when to get out. Profits will be taken automatically. No need to stare at your screen all day long and run the chance of being emotional and having that get in the way. The downside risk is covered. You'll know ahead of time what your risk is. The upside profit potential is also covered. You won't have to wonder when to sell and take profits. Again, all of this is done automatically the night before when you follow the alert I'll send you. So in the evening, around 7 p.m. Eastern Time, you'll get an email which looks like this. Quick and easy. I'll tell you exactly what you need to do, and you'll have plenty of time to act. From the comfort of your own home, and in fact, so simple, you can even do it all on your phone. No need to even fire up your computer. Just a few clicks to enter the number of shares and your entry price, your profit target, and then let the market work for you. Remember, our profit targets are automatic. So when the profit target gets triggered, money is automatically deposited into your account. You don't do a thing. Imagine waking up with $5,000 in profits or even $10,000 and realizing you didn't have to be glued to your computer screen. You didn't have to experience the roller coaster madness of the markets. You did this without letting your stress and emotion get in the way. Another thing to keep in mind is that you'll always hear from me. Even if there's no changes to the portfolio on a given day, I'll still email you and let you know nothing's changing. This is white glove service, and I'll hold your hand every step of the way. And if you have any questions, if something doesn't make sense, ask me. I'll host a Q&A session to answer your questions about the service. Also, once a month, I'll give you my thoughts on the market and the economy. It's a quick read that will keep you informed. I also cover topics you might not read about in the Wall Street Journal or hear about in the mainstream financial media. I'm not going to sugarcoat anything. I'll tell you the truth. On top of that, you'll receive a portfolio update video from me every 2 weeks. I'm not the prettiest face on the planet, but every 2 weeks, I'll show up in your email looking like this. The most recent topics in my video have been the GameStop frenzy, as well as stimulus and that's effects on the markets. And finally, once per quarter, I'll review our performance. I'll look at our winners and our losers and summarize how we did compared to the S&P. As you might imagine, this type of service isn't cheap. Price is fair, it's certainly not cheap. The value of a lifetime subscription is about $10,000. The cost for a one-year membership is $3,000. Like I said, it's not cheap, but it's fair. As I mentioned earlier, if you used a $25,000 portfolio and followed our alerts for 2020, the 10 stock system could have made you $15,698. So really, you shouldn't overthink this. Here's why. The moment you become a member of the 10 stock system, you get access to a suite of life-changing, money-making resources and benefits. And that's no exaggeration, as we've seen here today from members like our current member, Alan. Hi, Bob. Closed my 50th trade today since being a member since March 23rd, 2020. Closed realized profits, $27,911.20. Average $3,488.90 per month. Appreciate all your efforts and mentorship. Alan. The 10 stock system members receive access to my entire portfolio of alerts with detailed buy up to prices, entry and exit prices. In the past, subscribers who followed these alerts have seen gains as high as 27.1%, 23.3%, 19.4%. That's enough to pay for the service. Remember, one of my biggest benefits of my 10 stock system of alerts is you get to take gains over and over. It allows you to take thousands of dollars and large percentage gains off the table and not worry about whether the value of your portfolio fluctuates. And don't forget the video updates I send out every 2 weeks. I never hide from you. I'm just not wired that way. I'll give you the good, the bad, and the ugly on the markets. If the system is signaling for us to back off, that's exactly what we'll do, and I'll tell you about it. Now, as the newest member of the 10 stock system, you'll be lined up to profit immediately. The first thing you'll get your hands on is my position size calculator training video, where we dive deep into one of the most important areas of trading. The topic can be quite boring, but if you've ever asked yourself how much or how little of a particular stock to buy, or if you're wondering what to do with the 2 to 8 alerts that you get from the 10 stock system, this is a video you'll want to watch. Truth is, at $3,000 a year, the 10 stock system is a steal. And while I don't know how long I'll keep the membership open, I can tell you I'm already planning the next price increase because frankly, $3,000 is simply too good. But today, you won't pay anywhere near that. And that's for 2 very important reasons. First, because you watched this far, I know you're serious about finally being one of those people who knows exactly what to do amid all the Wall Street craziness that scares the hell out of everyone else without the dangerous ups and downs most traders go through. For this reason, I want to make it a complete no-brainer for you to join and take advantage of all the emotionless trading. And second, because this is the first time I've officially opened up the 10 stock system to a large group of new subscribers. Aside from the small circle of subscribers who have been profiting handsomely, this is the first time I've opened up access. For those 2 reasons, I'm going to offer you an incredible deal. I'm going to slash half off the yearly new membership fee. Instead of $3,000 for a very short time, you'll get a full year for half off. That's just $1,500. So today, you get access to hedge fund quality research, which allows you to profit without letting stress and emotions derail you. In other words, today only, and for a very short period of time, you'll get recommendations, guidance, and research into this market for around $28 per week. You see why I told you earlier not to overthink this, not to procrastinate? All you have to do is skip 1 night out at a restaurant per month, and that's enough to get you in front of these nightly alerts that can lead to very nice profits. Of course, not every trade is a winner, but with a 70% win rate, you'll have what I call profit windows more often than not. And those profit windows add up to very big gains, life-changing gains, where you potentially never have to worry about money again. You can add those restaurant visits back in and more. So when you become the newest member of the 10 stock system right now, you'll get to join for just $1,500 per year, a 50% discount. You get it for half off the regular price, which comes to a measly $28 a week. You should see an order button below this screen now. You'll be taken to a secure membership enrollment form where you can review the details of your offer and make sure it's the right offer for you. You get all the membership benefits discussed here, instant access to the position calculator training video, the core portfolio, nightly alerts with full instructions, video updates every 2 weeks, and detailed portfolio performance tracking. You'll get all of this for just $1,500, which is just $28 a week. Plus another bonus. If you sign up today, I will send you an additional set of trades. I call them high beta trades. These are often faster moving and can include currency and commodity ETFs that don't make it to our initial screen, but still not only have the opportunity to provide you with extra profit, but can move faster and often farther than our core trades. They are riskier, but because we control risk and still use responsible position sizing, they can be a powerful addition to any portfolio. Last year, our high beta trades had a slightly lower winning percentage, but a higher reward to risk and shorter hold times than our core portfolio did, resulting in higher annualized returns. High beta trades made a full 24% more profit on average per trade than the core trades did. These can really move. Remember, if you want a full breakdown, you can click on the button now. This is a very time-sensitive offer being made to you. And I can tell you, you may not see the 10-stock system again, ever. Don't put this off. Don't procrastinate. At just $28 a week for a short time only, this is truly a no-brainer. Thank you.
Well, welcome everybody. Hopefully everybody had getting ready for a really nice summer. It's beautiful here in New York. I don't know how that will basically help us in trading, but that's hopefully what we're going to try to accomplish. You know, the great thing about trading is you can go out and you can work part-time. You could do what you want. Now COVID looks like, you know, hopefully pray to God that, you know, here in New York, they took away the mask mandate. Eventually people are going to have to go back to work, and you're probably going to realize this is really not a bad job. You know what I mean? I mean, you're probably looking at this and say, you know what? Trading has really been exciting. I mean, we've seen what happened in the market. We've seen what's been happening with specific stocks. I mean, there's some great opportunities to make money there in certain stocks, and that's basically what we're going to try to accomplish. So what I'm going to talk about for the next 45 minutes is how to improve your entries and exits using something called NASDAQ Total View. Now, let me just change the slide here and just tell you what we're going to be learning. Basically, we're going to be covering, you know, how to find the smart money using the NASDAQ Book Viewer. And I don't know if some of you know what that is, but I will go into detail explaining it. Why 90% of the traders fail. I mean, that is a huge, huge problem. And, you know, a lot of us don't want to do that, but I think that probably want to know why. Why do people lose money in trading? And you know what? What am I doing wrong? Why every trader needs time in sales. I'm a tape reader. I'm going to show you how to read the tape, showing you to see if these orders get executed, how they go up, how they go down the way they do, and how to read charts correctly, because honestly, a lot of people read them backwards, and it's time to stop, you know, not worrying about the past. It's time to worry about the future. All right, so let me just get something up here running, and hopefully I can share my cam over here. Always like to see if everybody can see it. All right, there we go. Everybody can see my video cam? I don't know, I feel it's always personal when you see the face-to-face, you know what I mean? So I always like to show the cam, let you know I'm a human being just like you guys. So anyway, let's talk about who is CyberTrade University. Very briefly, I don't want to bore you about this, but you know, I'm actually one of the original day traders. They used to call me a SOS bandit back in the early days. I actually worked at some of the biggest prop trading firms here in New York. And I'll tell you, before I was a successful trader, I was a successful loser because I thought I was an ignorant 22-year-old kid. Say, yeah, you know, I could do it myself. I'm actually going to be 50 this year, September 18th. So guys, remember that. Going to meet a milestone. My God, 50 years old. Anyway, but I'm still doing it. I love it. I'm a junkie into trading. I trade every day. I win. I lose a lot. I make a lot. But at the end of the day, I still come back every day and I do what I do. Now, I'm only as good as a trader is because I surround myself with good traders. So what I'm looking to do today is I'm going to tell you guys a little bit about how I got into the industry and how I became a successful trader. And then hopefully you guys are willing to do the same by me teaching you how to play the game. Trading is a game. You just got to know how to play it. Okay. So regardless of what kind of market you're in, what you're doing, you know, I always tell everybody that I know everybody's doing some futures, some Forex, some options, swing trading, day trading. Listen, if you're not successful in 30 to 60 days, you're pretty much maybe better off changing your career, not out of the industry, just maybe a different market. But I founded CyberTrade University back in 1995. I started one of the first schools out there, and you know, and the reason for it is the way you could only learn how to trade successfully is you have to work for somebody. So I found a little bit of a niche. I'm like, well, why don't I start a school, teach people, and just recruit traders, and we all trade together. So that's how CyberTrade University has been born. And what I'm going to do at the end is I'm going to invite every single one of you, and I'm just going to share it with you right here. I'm going to share, right here is basically my professional trading room. I'm going to invite every single one of you to trade with our instructors, our students, everything. So, but before I waste your time or my staff's time or even the trader's time, let me tell you a little bit about what we're going to learn, and then we're going to go from there. So, like I said, I'm married, 23 years. I've got 3 wonderful boys. Unfortunately, I don't make girls. But what's great about being a trader is I can spend a lot of time with them. I feel that trading helped bond my relationship with my family because I have the freedom to come and go whenever I please. I think, that's why a lot of us are getting into the industry, because you want to do the same exact thing. But once again, people always ask, if you're such a good trader, why do you teach? Well, because I have to surround myself with good traders. That's why I'm here. So if you think you have it in you and you like what you hear, I'm going to show you exactly why people fail in trading. Hopefully all of you will come and join my trading room for a week so I can show you what it's all about. So why do we trade? I know this is a dumb question, but you're here to make money. Period. End the conversation. Don't tell me, because we have a new administration or we got the COVID, whatever. Listen, you are here to make money, and honestly, you should not care what you trade other than what's going to give you the least amount of risk with the high amount of reward. That's about it. So don't be looking at something because this gives me better leverage. This has got a better time. No, it doesn't work that way. To be a good trader, you have to go out there and, not trade something that gives you less risk with more reward. Now, the way I've learned how to trade, and what I'm going to pass on to all of you, which you're about to learn, is I'm going to teach you how to do something that's called follow the money. That's it. Just follow the money. Listen, I can't move the market. Neither could you. Neither could maybe some brokerage firms. But you also heard about the Reddit stocks, right? You heard about the GameStop. You heard about AMAT. You heard about what happened with the Wall Street bet guys. Listen, when you got 2 million people all buying the same stock, listen, yeah, you could run up the stock too. But the thing is, how do you jump on there? Well, do I join the chat rooms? No, you don't have to. I'm going to show you exactly how to find them because they're there every day, okay? Like you said, here's the GameStop move, and we had a big, big pop. How did you find it? How did you know about it? I didn't have to do my research, okay? I don't have to go out there and read the news like what happened with AT&T this week when they had this big merger and all of a sudden the stock tanked. News only makes volatility. But the thing is, how do we know it's going to move? How do we know which one to follow? And how do we know it's going to continue that trend? Well, the first place that I go to not be part of that 90% failure rate is you need to know how to scan stocks. Now, the first thing we teach our traders, which all of you are going to see, is we just work through the big percentage gainers and losers. That's it. There's a lot of stocks out there, moving in the market. You can't trade all 25,000 stocks out there. You're looking to trade the one that's going to give you the least amount of risk with the high amount of reward. That's about it. Now, remember what I told you. You're only here to make money. You don't want to know what the company does. You don't want to know what it does. You don't need to do your research. I had one guy tell me, I know when the CEOs go to the bathroom. I'm like, great. Well, what does that do for you? Okay? What does that do for you? What you're here to not sit here all day and trade all day. That's why, listen, the market's open. How do I have the time to sit there and talk to you now? Shouldn't I be trading? No, because I was done at 10:30. I only trade an hour a day, and if I want, maybe an hour in the close. But how do we find those stocks? We scan them through the big percentage gainers. Now, what we do is we teach our traders in a way of how do you know out of all the ones out there that's going to give you the least amount of risk with the high amount of reward? That's the big thing that we all have to look at. So my question to everybody is this, and this is I'm gonna try to interact with everyone. So please, try to contribute. Don't be embarrassed. Nobody can see anybody's questions, wherever. But does anybody here know how to read level 2? Just give me a yes or no in the questions field. Or in the chat. Right in the chat. Yes or no. William, don't know. Rodney, you don't know. Judy, you do. Okay. A couple of traders out there. I know what your names are, but some of you said yes. That's it. There's almost 100 people and only got about 10 answers. Come on, guys, don't be shy. No one's going to make fun of you. Do you know how to read level 2 or not? All right, listen. Important way to answer trading, how it works. The way things go up and go down in anything is called supply and demand. What you're looking at is something called supply and demand. You're going to see where the buyers are. You can see where the sellers are. So let me get my little crayon out here so I can point out and show you what I'm talking about. Hold on a second. All right, here's my pen. So right here on the left, ooh, bad color. Gray doesn't work too well. There we go, red's better. Okay, so here are your buyers, which is the bid, and these are your sellers. That's the ask. There are 3 columns, 1, 2, and 3. The first column is a 4-letter abbreviation of brokerage firms and ECNs. The second column tells you the price that brokerage firm wants to buy it, and the third column tells you how many shares they want to buy. Everything there is multiplied by 100. Whoever wants to buy for the least amount of money, the most amount of money, is up on top. Whoever wants to buy for less money is down at the bottom. So what you're looking at is a negotiated chat room. Everyone out there is advertising what they want to buy for and what they want to sell it for. Now, the problem with level 2 is this. It's free. And you know why they give it away for free? Because it's worthless, okay? It's garbage. It's been outdated since the 90s, all right? So there is something else that we use here. And let me just clear up my chat, erase all drawings, and let me change the slide. There is something that we call level 3, NASDAQ total view. So that's my next question to everyone. Does anybody here have level 3 or total view? Let me see if you guys be able to answer this. William, you don't. Okay. Mike, you don't. John, you don't. Judy, you don't. Okay. Judy, you do. Okay, very good. All right, guys. So what I'm about to show you is going to be quite disturbing to you because I'm going to show you where 70% of where all the buyers and sellers are. The other 30 is like retail and all that stuff, all the dark pools and everything else. I'm going to show you where all the high frequency trades are, where all the algorithms are. All those big orders that you wish you could follow, you're going to see where it is now. It's going to be very disturbing because you're going to be like, why did I not know this before? Why didn't someone not tell me this before? Okay, so we're looking at something called NASDAQ Total View. All right, now when you guys get a chance, I'm just going to bring up our website really quick here. Hold on one second, ctu.co. Let me just bring this up. All right, right here. This is our website, Cybertrader University, and right here on our homepage or our website, you can see this video right here. I was actually showcased several times on the NASDAQ talking about their platform. Now remember, I don't work for any of these brokerage firms. They don't pay me. I have no allegiance to them. I am brokerage firm neutral. But in the exchange of NASDAQ wanted me to go out there and talk to their audience to show people how important this is. By not using this tool, you're trading blind. How do you not follow where all the orders are? So when you get an opportunity after watching this event, go there and watch that video. I'll just put the link there for Cybertrader University so you guys have it. Actually, if you click on our YouTube channel, is it playing? Oops. You can go on our YouTube channel and watch it also. All right, so anyway, so how does this basically work? Level 3 is going to give you 20 times more data than level 2 does. Means you're going to see more orders at more different prices everywhere. So you could see here, I'm going to explain to you how it kind of works. So let me get my little dot right here. Hopefully you can see my dot. So you can see here we're looking at a stock called Macy's, okay? Now, Macy's at 9:30 went from a price of $18.60 all the way down. It stopped right around $17.60. Now, why did it stop at $17.60? Why didn't it stop at like 18? Why didn't it stop at 16? Why did it have to pick exactly $17.60? And not only that, it hit it there a few times and eventually went up to about $18.20. Why? Because of one reason and one reason only. It's not because it was a support level. It's not because Fausto said so, okay? It's because there was a 332,000 share buyer out there. That's it. It's the only reason why. Huge buyer. Listen, you got buyers all over here. Look, there's the buy orders. Remember, where a stock makes support levels are buyers, okay? So just because you see support level doesn't mean it's really a support level. To make an official support level, you need to have those buyers. And you could see that there were buyers 2,000, 1,000, 800, 700, $300,000, 300,000 shares, a lot of shares. You're talking about, well, what is that? About close to about $6 million worth of stock? How many of you out there are buying 300,000 shares of orders? I don't think so. So why would you question that? And that would explain why the stock eventually hit that support and went up. Let's talk about resistance levels. Mara, one of those great ETF stocks, okay? So let's talk about the ETF. So a blockchain, Mara, great moving stock, right? Went from a price of $22.80, stopped exactly at 12 o'clock, stopped at 12, right at $25. Why 25? Why didn't it stop? Why did it, go past 24.40 when it said it was resistance before? Why this one? And then all of a sudden, why did it drop all the way down to 23.20? What caused that? Well, if you look right here, fellow traders, what makes resistance levels are sellers. So when you look right here, hold on, these are your sellers, right? And what we want to look for is big orders, 200, 100, garbage. Oh, look at that, 127,000 shares. There are 24 orders around the world that make up that order at 25. What do you think is going to happen at 25? I can tell you one thing, I don't want to own it. I don't want to question a big order out there trying to sell, and there's not even just one person, there's 24 different people out there doing it. It's all about following the money. You see, being a good trader where people fail is they don't have a game plan. You got to have a game plan. And when we trade with our traders, we're always looking for support. We're always looking to know where to get in and where to get out. You see, we don't work on the past like most people do, because a lot of people like to look at, what's the Bollinger Band doing? What's the MACD doing? You see, those are predicated what happened in past. We like to focus on the future, okay? Because if I'm climbing up a ladder, I'm not looking where the indicator is behind me. I'm looking where the ceiling is. I'm looking up. I'm not looking down. Because if I keep going up that ladder, I'm going to hit my head. Well, how do I know where I'm going to hit my head? You got to see where those orders are. It's part of doing business and trading. By the way, did I confuse anybody yet? Anyone get lost? Everybody following along? Just give me a yes or no. I am from New York. I do talk a little fast. I apologize. But everybody William following along? Good. Yes, yes, this will be recorded. Yes. So far, are you good? All right, great. All right, so here we got Edsel. All right, so let's have a little fun. Is this stock going up or going down? What do you guys think? Just give me up or down in the trading room. Looking at the trend of the stock without looking at any crazy indicators or anything else, what do you think the stock's doing? Judy says down. Mike says down. If you don't know the answer, give me a big fat question mark. Zula, what about you? I didn't hear from you. Pete, Paul, Paris, Neil, what do you think? Up or down? All right. So first of all, I don't know why you think the stock is going up. The trend is going down. So if you said it's going down, congratulations, you won. Okay? You just passed, the beginner staging of Chart 101. I know it's a stupid question, but I like the stupid answer because I had people that did say it was going to go up. I still don't know why you think it's going up. It's really going down. Now, you ever in a position and you're losing money and you're like, damn it, when is this stock going to stop? Do I sell it now? Do I look up the news? I mean, why is it trending down? What do we need, fellow traders, for the stock to go up? What do we need? Exactly. Buyers. We don't see buyers on a chart, right? So what do we need to do? Go to level 3. So when we look on the bid side, because we need buyers, we look on the left and we'll notice that there is right around $9, there's a 259 different orders out there that make up 100,000 shares. Now, listen, there's people who want to buy one share, one stinking share. Come on, seriously? But you know what? Everything is being advertised. 800, 300, wow, that's a pretty substantial big order between 100 and 3. What do you think I want to do? Right around at $9. Sell? I mean, if I'm losing money in a position and I'm coming up to a big buyer, I mean, nobody likes to take a loss, but I might want to consider holding because I finally came up to a substantial buyer. And you know what? How many of you guys sold the stock and as soon as you sold it, the damn thing went up? Well, did you see if the orders were out there? Happens all the time. And guess what? The stock did exactly what it's supposed to do. It came right to that $9 and shot back right back to 10. How many of you got, many of times it happened to you? Yeah, I know. It's like, oh my God, as soon as I sell the damn thing, the thing goes back and I end up losing money. I would have made money on that trade. Did you follow the money? Did you follow the orders? This is what we preach here at Cybertrade University. This is what I was trained from day one. If you read any of the old books, or maybe you want to read my book, it's How to Beat Market Makers at Their Own Game. It's been, published by Wiley, biggest, published company, one of the oldest and biggest published companies in the world. They begged me, says, Fausto, please, could you write a book? I don't want to, honestly, I don't have time to write a book. I don't have time, but you know what? Being an author is great. And it's a fast read. It's something basic. You get on Amazon, but you know what? Forget about that. How about seeing it live? Seeing it live. Because this is what I was trained, and nothing has changed other than in the past, we used to use something called Instinet machines. Now we're using level 3. All right. Without looking at a chart, without looking at some indicators, right? Can you guys tell me where, in theory, do you think resistance levels would be on the stock PFE? Let's see what you guys think. Anybody can tell me? Where do you think are resistance levels? Where would you, remember, you got to have a game plan, right? Making money, stocks going up. When do you get out? Where would be our resistance levels? I need a number. Well, remember, let me give you some assistance here. Some of you are not following along. A resistance is built by sellers. Where are the sellers? They're on the right. Here's the sellers. Can you guys tell me where you see a significant seller? Trader says it's seeing too small. Oh, sorry about that. All right, well, if you said 36, I agree with you. Now, without looking at a chart, without looking at some indicator, without looking at anything, right away, I just know that if this stock was trending up, I'm literally 9 cents away from a big, substantial seller. Not only that, but there are 200 people out there that make up that 60,000 shares, okay? And you're talking about what, about almost $3-4 million worth of stock? Well, for some reason, that's not what the chart says on Fiserv. The chart says it's going higher. But you see a little red line I drew right up there? I mean, that stock, it looks like it's breaking a higher highs, everything. But if you didn't have that game plan, boom, the thing came right back down to 35.70. Why and how would you have known that? Because you got to follow the money. See, traders, it's not really that complicated to make trading. People make it more confusing and more involved. The hardest thing about trading is the discipline and the greed. It's a little psychology that's involved. But if you just are a little bit more aggressive, buy less shares, trade more often, analyze your trades, surround yourself with good traders, which I'm going to hopefully get everybody here the opportunity to do that. You know what? You can have a really nice career in trading. You really can. But it's all about knowing how to play the game. And remember, this is not the Fausto strategy. This is not like, oh, the Fausto-Nachi indicator, or that people like to put their names up at the end of it. The Fibonacci, the Bollinger Band. I mean, these are mathematicians. I'm just a day trader. And why I day trade? Because I like to sleep at night. I like to hold positions overnight. You obviously what's been going on lately with the market getting awfully volatile. And you know what? If you want to be a good swing trader or an investor, you got to learn how to day trade first. It's part of the movement of the stock. So why can't we hear anything? I have no audio. Oh, sorry. Someone looks like I have an issue right there. All right. So basically what we're teaching and what I'm looking for is I'm looking for traders that could help me find what we call iceberg orders here at Cybertrader University. It's a word that I came up over 20 years ago. There's no software out there that does it for you. There's no scanner. But what I'm looking for is I like to find people that I could teach, that I could trade, that we could trade together and find these big orders and trade stocks that are moving. You know, I'll give you like an example. Like there's a stock right now that our traders are trading, and I'll tell you in a few minutes. Let me get back to it because I only got about 10 more minutes. I want to show you a few more other things. So anyway, so how do we know these are real orders? Now, it's another thing people ask me. How do we know they're canceled? First, there's no such thing as fake orders. These are all real orders. And every order is being, I don't know if you guys use something called time and sales, but time and sales, basically, I'm a tape reader, and basically we're just reading the tape. We'll see if these orders are getting done. Like in this example, let's go back, look at stock called SKLZ, all right? Do you see 120,000 share buy right here on the left? Do you notice time and sales, green, 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 green? What that tells me is that that seller, someone was buying it from that seller. Because when you look over here, this was at resistance. Hold on. This was at resistance there. You can see how it hit it, came back down, hit it, came back down. Finally, it broke it. That was that seller. Well, the guy was getting executed. And you know what? That could happen. Why stocks don't break resistance levels? How do they break resistance levels? Because the seller that was holding it down actually got executed. How many people here are using time and sales? Some people tell me, oh, I don't use it. It moves too fast. Well, listen, you got to always ask yourself, who really trained you? Okay? Who really trained you? Because we always tell everyone this. Every one of you need to be trained. And we always tell everyone, go learn from other people, then come back to us, and we'll show you why, you know, what separates us from other people, because we just follow the money. It's not the specific strategy that comes to trading. All right. Let me erase this, and let me change the slide here. All right. So what happens when these big support levels break? Same exact thing, right? Look at this one. Stock goes from 14.20 down to 13. Stops around, you can see there's a big 100,000 share order down there, 110,000 be exact. And look at all the orders, 19, 19, 19, 12, 1290, 1290, 1290, 1290. The guy was getting executed. Look at all those orders. And yeah, that's why it dropped from, you know, 1290 all the way down to 1180. If you knew, I mean, how many of you here also get into a trade and be like, you know what? Why didn't I sell it? Why didn't I get out of that stock? Okay, what made this stock go down? You know what I mean? Like because if I just got out a minute ago, I probably wouldn't have taken a big loss. Well, maybe if you saw that order out there that you thought was support and started knowing that he was getting executed, maybe you should have got out too. And maybe you would have took a small loss instead of a big loss. You see, it's all about orders. A couple of questions coming across here. This is priceless, buying next week. Well, listen, you're not buying anything, okay? I'm going to invite every one of you in my trading room. I want to prove it to you because I don't want to waste your time, really. I mean, I'm not looking to sell a strategy or anything else. I want to invite all of you to see this live and see if it really does work in the market, because I practice what I preach. And it's not just me, fellow traders. I have other instructors that are in there also. We have students, we have schools out there that are our students, which we're very happy. And hopefully one day maybe you could be the same, because eventually you're going to outgrow CTU, and you know, you're going to need to surround yourself with a good team. But there's just too many people lose money out there. I have everyone telling me, Faust, if you keep talking about this, everybody's going to know it. Yeah, you know what? We got close to about almost 200 people in here. There are over 20 million people around the world trading. Trust me. More people, no matter how I could be blue in the face and tell you, you know, to pay $5 for one thing, they still say, but I get it for free. All right, well, you can't convince everybody. All right. So regarding about indicators, listen, what chart's easier to read? Chart the one on the left, chart number 1, or chart number 2? What chart's easier to read? Oh, so you're telling me all these Bollinger Bands, MACDs, SMAs, stochastics, what do we got? Indicate. By the way, it's so damn small, I can't even read it. But, you know, there are people actually could read this stuff. Pretty impressive. I don't. I can't. I'd rather just sit and look at this. Yeah, support, support, support. Oh, my buyers are at 15. That's all I care about. I don't need to see all this fancy colors and indicators and stuff. It might work for investing or long-term trading. It does not work for day trading. I don't care who you are, where you came from. I don't care what you've been taught. Trading is a job. You just got to know how to follow the money, and that's it. Now, one last thing before we move on. Have you guys ever heard of something called level 4? Anybody here seen it? I mean, I just talked about level 3. I know we had some level 4 some people had level 3. Anybody heard about level 4? No. Anyone else? Okay. So let me show you something. There's something we're going to teach you called level 4. Now, if you are a chart reader, we're going to show you exactly how to see orders out there and how long they've been out there for. Like you can see right here, we're looking at a stock called SPACE, S-P-E-C, and you could see right here, the stock literally went all the way up to, 2150. You can see that line right there. You see that red line? That guy's out there. He's got 73,000 shares out there. No wonder why the stock went down. And you look down here, it came all the way to 19. Why is it stopping here at 19 since this morning? Oh, because there are, give or take about maybe 40,000 shares on the bid. Where about everything else? 3,000, 5,000, 2,000. You see how we're talking about a stock that's very well known, okay? Stock was actually a $60 stock not too long ago. But look at it. And you can see it right here. Look at those orders. See that? Actually, there's more. Look, actually, the guy got executed. Look, the guy got executed, 60,000 shares. What do you think's going to happen when you get a 60,000 share seller get hit? See it right here? Boom! Drops. Cha-ching, what a great short that was, huh? All about following the money. I bet you can't see that on a Bollinger Band. You're going to wait till you see this stuff live. You just saw one live, which is pretty cool. All right. You can't make that stuff up because that was unpredictable. We were just at the right place at the right time. That was live. All right. Now, the next biggest thing you guys got to know is that the potential income. You don't really need to make a lot of money to make trading very successful. If you buy 1,000 shares of stock, if it moves 50 cents, you can make yourself about $100,000 a year salary. Doesn't sound that hard, right? Just in 1 hour. This stock literally went from 11 to 13. 50 lousy little cents. You don't have to make a lot to make a big career in trading. And I think that's everybody's issue. They keep getting overwhelmed. Oh, this guy is showing his profits at 2,000, 10,000. Listen, some of us just want to live comfortably. Some of us are on Social Security, and we know that that's not going to pay enough. Some of us are retired, and we saved all our money. We don't blow it. Don't be overwhelmed with these big people on YouTube bragging how much money they make. First of all, this is not the Wolf of Wall Street. Egos, another self-made millionaire. You know what? Maybe it's true, maybe it's not. I don't care, but let's look at what's best for ourselves. If a lot of us can learn just to make a nice day's pay, I think everybody happy with that. And that's what I've learned over the years. Because at Cyber Trade University, nobody brags. But now, one last thing before we go, guys, because I know I'm running out of time, and I know the next presenter is going to be coming up. It's amazing how fast time goes. But just want to remind everybody here, every single one of you are going to need from mentors, learn from mentors. Now, you're in a great presenter, an event today. You got a lot of great speakers out there. Everybody you hear should learn a little bit from all these presenters, okay? And you should go out there and buy a little bit from each other. But please, don't be ignorant. Don't be ignorant thinking you're going to go like, oh, I just served Fausto, talked about level 3. Let me look it up. Let me go try it. I'm warning you right now, for security purposes and for disclaimers. Don't buy anything or do anything we taught you, because unless I show it to you, you'll actually do more harm to yourself than good, okay? You want to learn how to drive a car? Let me show you how to drive it first. Just don't go out there and buy it and think like, oh, I can get away from public transportation. I can drive a car now. It's not that simple. So what's great about this job, you can spend more time with your family. You can always do the things you always want to do in life. It's a great job. We love it, but you got to learn how to play the game. Now here at Cyber Trade University, we're very pleased to say we're endorsed by some of the biggest brokerage firms in the industry. I've done presentations to some of these biggest brokerage firms in the industry. Believe me, they want you to learn how to trade, because if you know what you're doing, you'll be a client theirs forever. You're not useless to them. You're useless to them if you're going to blow up your account in 30 to 60 days, which, by the way, is very, very popular in today's markets. Okay, but and by the way, that's really hard to do, to get all these companies like Charles Schwab, Thinkorswim, NinjaTrader, MetaStock, TradeStation. They all know the importance of it, and also have a 5-star rating on Google over 25 years, which is also very unheard of. So this is what I'm looking for, everybody. I want to invite all of you guys into the room. Okay, I want you to see what's going on. I want you to see how we find these stocks, how they trade, how they go up. I don't want you to buy anything. I just want you to see what's involved. And I don't care if you're a futures trader or forex trader, because you know what? If you're not making money doing it, you might want to change careers. Okay? I mean, listen, if you get it or you don't. If you're not making money 30, 60 days, you're pretty much wasting your time. I always use the theory of an employer. I hire somebody, I keep paying them, and the guy's not going anywhere, or he's actually doing more harm than good to me. I'm going to keep paying him? I got to let him go. It's the same thing when it comes to you, when it comes to trading. If things ain't working out and you don't get it, it's time for a change. And if you tried it, maybe you didn't find the right mentor, okay? But you're all going to need several different mentors, all right? So I want to invite every one of you to come to the original trading room. I want you to come in for a week. I want you to see how we do it. I want you to see the live trading in the morning, the afternoon trading, everything that we do. We usually start around 7:30 in the morning. We run all the way to the close. You don't got to be there all day, about an hour. Once in the morning, one in the afternoon, or anytime during the day, just the most volatile times in the first hour and the last hour, okay? And I don't want you to judge us on our winners. I want you to judge us on our losers, because the thing is, when it comes to losing, a lot of us don't know how to take losses. We don't teach people how to make money. We teach them how to stop losing it. That's everyone's biggest problem. Everybody's like, oh, could you teach me how to make money? No. I'm not teaching you how to make money. I'm teaching you how to stop losing it, and then worry about the rest later. So anyway, this is what I'm offering everybody. A quick little promotion, okay? I don't know who you are. I don't know. There's a lot of people's names. I don't know where you came from or what you're doing. But all I'm asking is for a $9 trial for a 1 week in the trading room. And if you like it, you pay $49 after that. If you don't want to pay it, don't worry about it. We're not going to make you run over hoops or whatever. But $9, that's all we need to know. This basically just tells us exactly who you are, where you came from. And this is what you're going to get for $9. You're going to get the live trading room for a week, a 3-day market meetings, a morning and afternoon watch list, a personal education advisor. Yes, you're going to be able to talk to somebody, a weekly live Q&A session, and if you're the first 20 people, I will even give you a personal coaching class, all for $9. Now, how do you register for that? Let me just get you the link and get you the trial. Hold on. So is this it right here? So here's our Cyber Group trading room. I think this is the promotion right here. We just launched our new website. So just want to get you the trial, upcoming event. I think that's the link right there. Oh, here it is. I'm sorry. It's on the homepage. Duh. Here's the link right here, guys. That's the link. So basically, register, do a trial, come in the trading room, book your appointment, talk to education advisor. Let them tell you a little bit about what the trading room is about. Let us know who you are. The more you let us know about you, the more we can help you. And please don't take this in a bad way. A lot of you really don't qualify to trade, okay? And you're better off someone telling you than you going out there losing your money. I mean, what the hell is $9? What do you have to lose? Okay, and by the way, no matter when you want to start, sooner the better. If you want to push it over a week, 2 weeks, but register now and get it out of the way. But you know what? You got to start somewhere. All right. I know a lot of you out there have tried some other rooms, whatever. Like, oh, I don't want to be in another room. Listen, you're gonna have to do your homework. You got to, listen. It's like going to college. I have a 17-year-old. He made me drive around the whole damn country to finally find out the school he wanted to go to was only up the block. I'm like, oh, now you tell me. But you know what? He had to make sure he made the right decision. I got 3 boys. I got another one and the same thing. You know what I mean? And then he made the mistake because he didn't go look around. And then when he finally was in that school, he's like, you know what? I spent all this money to go to this college. I hated it. Okay. Finally got into the school that he didn't think he wanted to go to, and he loves it. He's having the greatest experience. He's learning so much. He's a 4.0 student. He's on the dean's list, but he wasn't on the first school. Why? Because he didn't do his homework. You know, so I even have kids that we make these mistakes all the time. But you know what? But my second son learned from my first son. So the same thing when it comes to you. You got to try a couple of schools, do a couple of trials, and then make the decision. But every single one of you need to learn from not from one, but several traders. All right. So with that said, everybody, you got the next presenter coming in. You got about 5 minutes to do what you got to do. Hopefully you see you all in the trading room. Enjoy the rest of your event here at the, with Anna. And like I said, see you all next week in the trading room. Enjoy your rest of your day. Enjoy your weekend and be safe.
Hi, everybody, and thank you so much for being here. I would love to know, where are you guys all located? I'm seeing that there's somebody that just responded that they're in Spain. That is very, very cool. England. We're actually planning to move to Spain. We were going to move to Spain right when the pandemic hit. So obviously that didn't work. So right now we're kind of checking out to see with all the logistics because everything is so backed up. But we are, at the moment, our plan is to move to Spain. So there's only 2 people in the room, somebody from Spain and somebody from England. Is everybody else sleeping, or is everybody, where is everybody? I want to know. Yeah, it is a beautiful country, William. We've been there. We visited many times before, but now we actually want to go and make the full move. Phoenix, Singapore. Very, very, very cool. I love this. Such a international crowd. I love it. I love that with trading, basically, right? I mean, how many other businesses can you do that you could go and live anywhere in the world and trade? Buffalo, go Bills. Okay. And right now, Cynthia, it's probably beautiful, Buffalo, right? It's springtime still, technically, right? We're almost into Brazil. Where in Brazil are you from? It doesn't have your name. Calgary, Canada. I love Canada. I love Brazil. I think it's one of the most sensual countries I'd ever visited. I spent I don't know, a couple of months there. Such a beautiful country. So, so much fun. And Portuguese. I think Brazilian Portuguese is just amazing. Indiana needs some money in the market, make money in the market to move ASAP. Go Oilers. Oilers, I don't know where that is. Sorry. Sao Paulo. Yes, I was in Sao Paulo. Brussels, Belgium. Beautiful. Oh my God, this is so awesome. This is the first time that it's so international. Normally, a lot of the majority of people are from the States. So this is really cool to see. All right, guys. Well, let's get in and enjoy the presentation that I have for you guys. I do want to say, in Calgary, right? Okay, yeah, so I'm going to be very ignorant. Oilers, is that hockey? Because I know hockey is the national sport of Canada. And my brother was a hockey player, so he spent a lot of time in Canada, but mainly on the east side because we lived in New York. Edmonton, nice. Okay, guys. So I'm going to be talking today. I'm going to be giving you a presentation, but to be honest with you, the main thing I really, really want to focus on is you guys are here because I'm sure that you have some questions, that you might be having some struggles or anything, right? So I love to interact. I love to answer questions. So there is no bad question ever. And sometimes your question that you might think is not that great, you'll be surprised how many other people are like, oh yeah, I wish I asked that. So I want to hear your questions. You could ask during the presentation, all around. I'm here for you guys, okay? So today I want to talk about the breakout trade. I'm sure that we have all heard about the breakout trade. We all know about the breakout trade, but I really want to dive deep into the breakout trade because if you miss a few little parts of the breakout trade, you'll miss the breakout trade, right? And breakout trades in any market, does not matter which market you're trading, is probably one of the highest probability trades out there. So that's why I really like to focus on how to spot and identify these trades. I am Marina. I'm Marina, the Trader Chick, and that's me with one of my little boys. And today what I want to really cover is understanding market movement, using your indicators for the best entries and the profit targets, identifying and profiting from the breakout trades, right? And also scalping. I personally am a scalper. I'm going to touch a little bit upon scalping because it changed my entire life and my trading game altogether. We can see the recording of the screen. Yes, you definitely can. Anna is going to be recording everything, so we will have everything for you. So before we dive in, I want to just do a quick intro. So we have such an international crowd, and I'm actually in Guatemala. I am an expat. I live in Antigua, Guatemala. I don't know if any of you guys have ever been to Guatemala. It's beautiful. Antigua is probably one of my favorite countries that I'd ever lived in. And I have to admit, I've been to quite a few. This is my family. My husband is Guatemalan. I am trilingual, and mainly the reason why I bring up being trilingual is to kind of allow you guys to see trading in a different perspective. I'm actually a refugee from the Soviet Union. I arrived, I guess, or migrated to the United States when I was really little. So I learned English when I was 6, right? So when you learn a language when you're really small, you're not really learning it. It just kind of happens. However, I learned Spanish. We've been living in Central America. We lived in Costa Rica before. For almost 20 years, I've been an expat here. So I am fluent in Spanish. But because I learned it in my late 20s, it's a whole different process. You know, if any of you have learned a second language later on in your later years, you'll know that it's a whole process. There's a lot of translating, a lot of patience, a lot of practice. It's a big process, and it's an overwhelming process sometimes, right? The point is that it's a process that you learn. And the craziest thing is when you really commit yourself, one day you wake up and you realize that you just speak it. You just understand it. Like for me, I woke up and I just spoke Spanish. There was no more translation in my head. I'm not 100% fluent by any means, but I could totally hold my own in any conversation and be around multiple people. And that's when I realized I've been trading. Actually, in the next couple of weeks, I'm going to be trading, like day trading, for over 9 years, right? So when I actually had that like click, that real understanding of it, I realized that it's the same thing as learning a new language, right? So that's what I mean. Like, that's why I bring up learning Spanish in the later years. Sandra. Okay, that's why, and I want to show you guys that today as well, that it is like another language. And just a really quick thing is, before I was a day trader, I was a fitness instructor and a travel writer. Actually, I was one of the very first fitness instructors in Manhattan to teach spinning and Pilates. And now I'm actually still a travel writer. I still run my travel site, and travel is a humongous part of our lives. I know with the pandemic, we've been kind of, homebound, although we've been doing a lot of traveling in the country. But trading, that's the beauty of it, right? It allows you to literally be anywhere in the world. And that is the coolest thing. Cynthia, what do I think of Russia these days? That's a very loaded question, right? Interestingly enough, I actually am from the Ukraine. So I never actually had any Russian ties. Like, even if I go back to Russia, I have to go through an entire visa process. So I think we should all just stop at the word Putin. He does what he does. I don't want to get into massive political conversations. Okay, so let's jump into the meat of what I'm going to be talking about. So when you're learning a new language, you get back to the basics, right? You learn the super basics. You say hello, you do certain things that are you don't just get in and start having a philosophical conversation, right? You can't. And it's amazing to me the amount of people that nobody actually really talks about the basics of day trading. That was my biggest thing. Like, barely anyone talks about the super basics, right? I felt like every time I was learning to day trade with different mentors and academies, and even watching videos on YouTube and reading. So I was constantly being taught how to put in a window when I don't even have a wall yet, right? Another really good example of how I'm seeing that a lot of people are learning is you say to yourself, okay, I want to learn how to day trade. It's kind of like somebody saying, I want to learn how to play the flute. And you arrive to the academy, the music academy, and instead of going through Music Theory 101 and taking the very first classes, you're immediately thrown into the the symphonic pit, right? And you have to keep up with these professional musicians. And I feel like that's a lot of what we are doing. And even like getting into these trade rooms when you don't understand what's going on and you're watching these people take these trades and you have no idea what's going on. And everybody's saying that they're taking a trade, saying because you don't really know if they are, right? And you feel like, oh my God, I have to do the same. I have to get in. Oh, you know, this was me, right? I never actually had a strategy in the beginning. I was just taking trades that other people were showing are good ones without having any idea why. And why is the basics, right? So it's literally just like when we get into a car, you know, it's amazing the amount of, like, now that we're driving, I don't know how many years we've been driving. I've been driving over 30 years. I'm seeing my son, who's 17, is learning how to drive a car. And when he gets into the car for the first few times, it's a whole new language for him. Where is the clutch? Where is the gear shift? Where is the brake? All of this is a language, right? And once you learn it, it becomes totally automatic. And that's exactly what I want to show you guys with the trading. If you understand the super basics, it becomes more automatic and you could make a bigger decision, right? And that's what it's all about. So before we go into the presentation, I actually have the whole presentation for you guys done on a worksheet so you can follow along with me now and also when you're going to get the replay. Just go to makingofadaytrader.com. It's totally free and you'll have this presentation. It's literally like the hack sheet that I use when I day trade. So go to makingofadaytrader.com. makingofadaytrader.com. You could go and get your free presentation worksheet right now and follow along. All right, so let's get back to the basics, building your trading foundation. Okay, so what are the basics of day trading? First and foremost, you cannot be a Formula One driver if you're driving a minivan or nothing at all. You cannot be a day trader if you do not have a good, strong platform. It's totally different if you're just investing. You don't need anything that powerful, but if you're day trading, you gotta be on it, right? You gotta be on it. And as I mentioned earlier, I am a scalper, so I need to be in and out. I'm usually in and out of trades within like 30 seconds to a minute to 2 minutes, right? So my platform has to be super strong. My feed has to be strong. We need to have a platform. I personally only use one. I use one. This is it. I don't have anything else. I use 2 indicators. You need to have indicators, and the majority, and actually, I shouldn't say majority, all good softwares, platforms have free universal indicators, so you do not need to buy any indicators. I use 2. I use EMA lines and the MACDs. That's it. I love them. So remember, go and get your presentation, which we're going to be following along, makingofadaytrader.com, and you'll have all of this there. So market movement and the breakdown of a trend. This is the super basics. And I know this might, a lot of people are like, well, I know this stuff. So, but it's always good to go back to the basics, right? We all know that there's an upward trend, there's a downward trend, and we logistically understand that there is a sideways trend. However, the sideways trend is literally where we lose almost 90% of our winnings for the day, or maybe even more, right? And you can go actually and check this out when you're back testing. You can see where the majority of your losses are, and they usually are in a sideways trend. What is a sideways trend? It's a channeling market. It's the chop. It's the exhaustion pattern. It's the indecision area. I mean, there are so many words for it. Consolidation areas, transition areas, they're all names. It's all semantics at the bottom. At the end of the day, it's flat indecision, uncertainty. You do not want to be anywhere near that kind of a market. So understanding it just really quickly, this is what it looks like. Downtrend, flat, uptrend, right? So just a quick definition of an uptrend is when each pivot is higher than the other pivot, also known as a bull market, market trending up, market going up. This is when you go in for a buy. All right, what does that mean? You go in at a lower price range and getting out at a higher price range. You're going for a long. You're going long, right? So you're buying. This is really important to even understand that basic terminology. Downward trend, the exact opposite. Each pivot is lower than the other pivot. If you are a day trader, you are going short as well as you are going long. What does going short mean? You are getting in at a higher price range, getting out at a lower price range, and taking the profit in between. If you're sitting here and saying, well, I don't do that, I only go for longs, you're not a day trader. That's just the way it goes, right? We probably make more money shorting the market than longing the market, because it's not about empathy and compassion and who's the buyers and such. It's about technical analysis, nothing else. Technical analysis, right? We short the market. You're banking on the market to go lower. Bear market, market trending down, whatever you want to call it. So as I mentioned earlier, I am a scalper. So I actually love immediate momentum. So when you are in an overall trend, let's say heading up, sometimes you will have a deeper retracement, but it's sometimes more than enough to give you really good one or maybe even two opportunities of entry, right? And that's called the immediate momentum. And for scalping, it really is awesome. And if you recognize that, you'll be able to get in on those quick, deeper retracements, but it has to be strategic. It's not just because it went low. You have to understand the reason behind it, right? So consolidation areas, let's talk about this, because this is literally the trader's worst enemy. Literally the trader's worst enemy. Okay, what is a consolidation area? This is what it looks like, right? It's when it is consolidating. It is when it is uncertain, when it doesn't have any real direction of anywhere where it's going. Okay, this is what it looks like. Now, why do we lose the majority of our money when it comes to these areas? I'm going to break it down for you so you really understand, and hopefully we'll be able to implement that reasoning behind it and not get into sideways trends. What is it? First and foremost, day trading is such a mental game, right? It is mental. It's completely an emotional, mental activity, right? Like I always tell people, it is at least 85 to 90% mentally and emotionally backed. So what does that mean? That means we are human. We come up with stories, right? Do you guys know what stories are? If you don't, let me give you a really good example. Imagine you just met somebody that you want to become friends with, and it looks like you're having a good rapport. And they're like, you know what? I'm having a party and I'm having a little get together in a few days. I would love for you to come. Let me call you tomorrow and give you all the details. And you're all excited. Okay, great. Tomorrow comes and goes and they do not call you. So what do you start to do? You start to create stories. Unfortunately, majority of our stories are usually negative, right? We have to learn to make them positive. But the majority of the stories, you probably start to be like, okay, maybe they don't like me. What did I say? Did I say something wrong? Maybe they talked to their friend about me, and maybe their friend said that there's something off about me. All these negative stories, right? They're stories. They're not real because we don't have any idea what really happened until this person calls you 2 or 3 days later and they're like, oh my God, I'm so sorry. My phone fell into the toilet. I lost all my contacts. I just got it retrieved, right? That was the reality. So the story you created was nothing but a negative situation and really did not do you any good, right? So what do we do when we trade? We tell ourselves stories. So when we start to notice the market consolidating, these are the stories we tell ourselves. So there are 2 types of traders out there, 2 types, right? One type of trader, and we all fall into these types of categories. You're either one or the other. There's really no in between. One is the trend is your friend category, right? That is the kind of trader you are. That means whenever you see a market and it starts to consolidate, you're like, the market is going up, the market is trending up. I'm going to go for long because it's going to continue going up because you believe the trend is your friend. The other category is the contrarian, right? What is a contrarian trader? For instance, I used to be a contrarian trader and still I am at heart, but I don't apply it anymore. What is a contrarian trader? For instance, when I used to see this, I'm like, you know what? It's been going up all day. It's got to correct. I'm going for a short. That's a contrarian trader. Neither of those stories are true because the market is going to do what the market is going to do, right? And at the moment, the market is flat. So what do we do when we see these with no stories attached? We stay out. Because one thing that traders, especially newer traders, don't understand, that there are only 3 positions in trading. Knowing when to get in, knowing when to get out, and the hardest one to do, and probably the one you'll have to do the most, is knowing when to stay out. Taking taking no position is probably a much more active thing to do than going into a position. Does that make sense to you guys? Because staying out is hard, but you have to know it and you have to sit on your hands and let the market tell you what it's going to do next. At the moment, it's telling you to stay out. You do not want to get into the market when it's looking this weird, right? And it could give you smaller consolidations. Like I said, because I'm a scalper, I only look for about 1 point target, which is about the size of this grid box. I stay out until it tells me exactly what's going on. And I need massive confirmation to do that with my indicators so I know exactly where to enter. Okay, consolidations, sideways areas, these happen all the time. And if you don't understand when they are happening, how are you going to know when there's a breakout to take from here, right? So you have to be aware of these. Look at this. Does this look like a compelling market to you? No, it's terrible. Now, how do you recognize these? How do you mark them off? How do you know these are happening? So areas. Look, the market respects areas, and we as well need to respect them. And the areas are the support and resistance areas, and they are incredibly important. And why are they so important? So here's a good example of the market, right? Here's a flat market. It's bouncing back and forth. It is respecting these areas until it finally breaks. But you never know when it's going to break until it tells you when it's going to break, right? So support and resistance areas we have to understand. So what is a resistance area? What is a resistance area? It's the ceiling of the market. It is where the market is hitting over and over and over again, and it is respecting that area. It doesn't matter if it goes in really strong or not, it hits it over and over again, and we have to have that drawn in, and we have to understand that this is an area that the market is respecting, and we need to sit out and wait until it breaks through that area. Here's the ceiling of the area, right? And look, like I said before, I am a scalper, so I'm only in the market for about 30 minutes to about no more than an hour ever anymore. Now, this is about a session of mine. So if I drew in this resistance area and if it hit here and it didn't go through here, I'm already prepared. I know what's going on. I see that this is a resistance area, so I'm not going to continue to go long, right? Because I understand the market has to really give me massive confirmation, break through that area for me to fully understand that. Okay, so this is a resistance area, and it's never a mental resistance area. You have to draw that in. Because when you're in the live market with your real money on the line, guess what's happening, guys? Your adrenaline is pumping. You are stressed out, right? You do not want to be guessing, why did I enter that trade? You want to know exactly why. And that happens because you've drawn it in and your indicators, everything is already telling you what is happening. So what is the support area? It's literally the opposite of the resistance area. It is the floor of the market. It is where the market hits 3 or 4 or more times over and over and over again. Okay? Does that make sense to you guys? This is a support area. It's the floor of the market. All right? And a lot of times it could be strong enough to fully change it, or it could just be an area of indecision until it breaks through. But if you don't have these drawn off and understood, you're not going to be able to know what is really happening, and you need to have that drawn. You have to understand what these areas are telling you, and these are the basics. This is like literally knowing where your accelerator is and where your brake is. That's how important these areas are. Okay, so resistance area, support area, knowing where they are. This is a channel, right? They are between these two areas, and it's bouncing back and forth, right? So think of it like this. Look at this, back and forth, back and forth. There is no decision here. Does this look attractive to you guys? Does this look like a compelling market? No. Yet why do we seem to want to get in and try to beat the market or predict what the market is telling us when it looks like this? Stay away. Let the market tell you what it's going to do. And it does. It really, really does. It tells you. Okay, even here, a wider channeling market. Look at this. It's so erratic. It's so bouncy between here that you're not going to be able to hop on the right train and move and go in the right direction, right? So, but I know that it's a channeling market because I have these areas drawn in. Okay, and this happens a lot, and that is why we end up losing a lot, but we also have beautiful flowing markets a lot as well. All right, so this is what these areas look like, and I'm going to be really hitting this because this is, I can guarantee you right now, that if you go into your trading journals, and I hope you all have a trading journal, because if you are not back testing, you are literally just throwing your dice on a table and just playing craps. Literally, there's no way for you to know what is working and what is not if you are not back testing. So I really hope you guys all have back testing. And I'm not talking about trading days. I'm talking about very specific trade setups. Very specific trade setups. You should have, every single setup should have a very specific guidelines and rules. I like to call them green lights. I will not ever just look at my trading day and say this was a good day or a bad day. I look at each one of my positions, each one of my setups. If there's divergence, what helped me get there? This is called back testing, right? We all know that everybody back tests like that. And you need to, for any kind of career, right? If you had to take your child to get an operation and the surgeon arrives and says, hey, I have a new idea for a new operation, I'm going to try it out on your kid, you're going to freak out because they are supposed to have back tested it, meaning they should have already tried it on cadavers, on dummies, and maybe even other ways before they touch your child, right? But people, for some reason, just decide to throw their money into the market. Maybe they spotted something and they're going to try it out. Why are you trying it out with real money? Make sure that it first works before taking it out in the real world, right? Don't give up your money so easily. So how do we start to recognize when these areas are actually happening? And you can start to do that in the very beginnings of it and learn to stay out right away. And what are these? The easiest, the simplest way, totally free on any chart that you are doing, any market that you are trading. Reversal areas and divergences. I literally call these the trader's map to shift in directions and trends. Okay, what are reversal areas and divergences? Double tops, triple tops, double bottoms, triple bottoms, and head and shoulders. Okay, so this is what they look like. This is a perfect triple top. It started off as a double top, and the second I see a double top, I'm already staying out of the market. And when it's a triple top, it's that extra confirmation. Now, how do I use a divergence with my charts? And on top of that, with reversal patterns. As I mentioned earlier, I only use two indicators. I only use the EMA line and I use the MACDs. I find the MACDs to be the least lagging indicator out there, and I've tried 1,000 of them. I used to have over 10 indicators, 3 monitors going on. I mean, I was in constant analysis paralysis. I was constantly stressed out, right? So when I recognized that divergences and the MACDs really help me recognize when the weakness is starting to happen, and you never want to be in a weak market, right? You always want to see where there's strength. So what is divergence? As you can see here, each pivot is going up. I have this line showing you that. And then in the MACDs, it's showing me that there's weakness starting to form, right? It's starting to go the opposite direction. This is a very strong move, right? I mean, a very strong indicator of a potential move, You never want to be like, okay, I'm seeing divergence or reversal pattern, I'm going the opposite direction. Never. It's a potential, right? But the potential is telling you that it's a higher potential for it to change direction than to continue in that same one. So do you want to be on that high direction? Do you want to be in that direction or not, right? So let's talk more about this. Double bottoms, as you can see right here, perfect double bottom, and look at this beautiful, perfect divergence. This is when the market is talking to you. This is what I mean about the language of the market. It's telling you, stay out. Let me tell you when to get back in. Okay, again, reversal patterns, divergences, but you don't have to even wait for the divergences with the reversal patterns to happen. You could just start to see them right here. You see, as you're going down, this pivot and this pivot, they're already massive divergence. So it's already giving me a warning. I'm a very conservative trader. So if I see this, I'm already sitting out. And then when I see this reversal pattern with divergence, I know for a fact that it's almost 90% that there's going to be a shift or a support resistance area until it breaks, and I stay out. Here's more, right? Look at that. Now, I want to put it all together here. But before I do, let's remember makingofadaytrader.com. Go and get your cheat sheet here right now. This is literally the whole presentation. You'll be able to go over it over and over again with the replay that Anna's going to be sending all of you guys. Makingofadaytrader.com. Makingofadaytrader.com. Okay, so let's talk about the breakout of areas. How do you recognize a valid breakout? So this is what a breakout looks like, right? It could be, again, from a resistance area or from a support area. We do not choose sides just because we feel bad for the sellers, right? It's pure technical analysis. Breakouts. What is a breakout? So this is a really simple way for me to explain what a breakout is. Imagine you are living south. You live south right here. And your sister or brother calls you up and they're like, hey, come over for a brunch. I'm having brunch. Let's do it. And you're like, okay, cool. Let's do it. You get in your car. You hop on the highway that you have taken thousands of times. You could do pretty much with a blindfold on. You go north, right? You hop on the highway and go north. But all of a sudden, there's a huge construction site and they're telling you, no, the road is closed. You got to detour. It's a construction area. So during the detour, I start to totally freak out. Why? Number one, it's completely uncertain. Where am I? What if they stop with the detour signs and not continue showing me where I'm going to be going, right? So I am in complete uncertainty. I'm nervous. My Waze or my Google Maps has not been updated that there is a construction site yet. What if I get lost? And what if this is a bad neighborhood? So basically, what is going on in my head is complete doubt, right? It's not a place that I would ever be placing orders into and saying for sure what's going to go happen, right? I'm not going to be putting in saying, okay, you know what? The construction is definitely going to be cleared and I'm going to go, right? Or no, you know what? The road is totally closed. Forget it. I don't want to go. Those are the kinds of decisions I'm not going to be making in that area. So as I'm driving all stressed out, the construction guy opens up the road and says, all right, you guys, it's all cleared. Get back on that highway. And you get back on that highway with renewed energy. That is the breakout. Because now you're back in your zone. You see that there is continuation, right? That's the breakout area. Boom. And that is where you get like that second wind of that trend. But you don't get it during. So you need to stay out during until it tells you, you know what, we're going, or you know what, no, let's shift completely direction and just go back. Because when you're going back, you're also with renewed energy. We're going to get to that in just a second, right? So the breakout trade. This is how I look for the breakout trades, but I also put in the MACDs, right? So here is a breakout, boom, there is a massive breakout here and a massive breakout in the MACDs. This is the zero line, that dash line. So anything above these two lines that I've drawn in just for myself to kind of help me when I'm in the live market to give me that extra assurance that it is a lot of strength, boom. Now, how do I use the EMA lines? We cannot just enter just because there was a breakout, right? We have no idea if it's going to continue or not. So you have to let the market give you a specific place. As a matter of fact, you have to tell the market exactly where you are going to be taking it from. Does that make sense? So think of yourselves as an archer, right? You know, have you guys ever seen like an archery competition? They don't walk around aimlessly. They have a very specific place they stand from. Right? They have a very specific place that they stand to throw their arrow, right? I guess shoot their arrow. It's the same thing for us. We have to have a place where we stand. We can't just go in on a long bar. That's ridiculous. Just because it's a long bar doesn't mean anything. It might just stop right there and turn on you, right? So this is how I use my EMAs. I put my order weightings. I never market. I never go into market order, not for day trading because you immediately lose money and slippage. So I put my order in, I tell the market where to enter, and that's how I do it. Now, as I mentioned earlier, transition trades, right? Like when the market transitions and starts a new trend, I call it an initial reaction trade setup. Like I said, I have a name for every single one of my trades. So what is that? Again, I'm using my support and resistance areas, but this time the construction worker comes out and says, you know what? It's completely shut. You're better off going back. And that's that, boom, I get that renewed energy to go back home, right? It's kind of like a horse going back. They always seem to go with a lot more confidence. It's the same thing here, right? My MACDs are strong. They're totally below everything. Massive movement down, right? Again, this is how I do it. I put in my order waiting. When I see this shift, boom, that's how I do it. So remember, guys, all of this is in makingofadaytrader.com. And now I want to do a little bit of a live market analysis with you guys. So before I do, are there any questions? Usually I get a lot of questions about my indicators and about all this other stuff. So let me know if there are questions for you guys right now while we are looking at the market, so that I could also explain to you what is going on and just how I'm looking at it. So this is my chart. I am an E-mini day trader. I trade the mini futures. This is what I do. This is it. I love it. It's probably one of the most smoothest flowing markets, and it's really great to work with. It's also a very high volatility market, which I totally love. I do not use time charts. You can see right here, I use tick charts. I don't know if any of you guys have ever used a tick chart, so I'm just going to explain it to you really quickly. Each one of my bars has 610 ticks. That means there are 610 real-time transactions going on. And you can see right here where it says ticks remaining, I am actually shown the amount of transactions happening in real time. Okay, right here, and also I get to see in real time how much volatility is going on, because the volume indicator, it's lagging. It will never tell you completely what's going on. So if you're looking at a 1 minute or a 5 minute chart and it's really slow, it's obvious that it's, you know, not a lot of volatility, not a lot of volume, but how much is it? So that's why I like to use the tick chart, because I get to see in the moment, real time, what is actually going on, right? So here I am. It's obviously been a beautiful uptrending market, but now look what's happening. We have a pretty strong support area forming here, right? So right here, this is that immediate momentum that I was telling you about, right? This is that immediate momentum that I was telling you guys about, right? So we're headed up here, but with this immediate momentum, I could monetize. I could take a really quick short before it slows down. And if it goes up, of course, I'm going to be totally prepared and ready to go in once it gives me that confirmation, once it crosses my zero line, once it crosses over my strength lines. But in the meantime, I also know right now I'm not continuing with any more shorts. Why? Because first of all, I have a support area. But how do I know I have the support area? It started with a double bottom and massive divergence, right? It's already telling me, the market just spoke to me, right? It's telling me, you know what, here's the double bottom, reversal pattern. I don't think I want to continue that much down right now. Give me a break, take a chill pill, sit out, right? And then look at that. The divergence continues, yet the support area is pretty much hitting it to the exact point, right? But yet it's telling me a lot of divergence is going on. So I'm sitting out. So what am I going to do? I'm going to wait to see if it breaks out of this and gives me enough confirmation, or if it crosses my solid line, which was my 52 EMA line, boom. And that shows me that it shift direction. And once it crosses here and once it crosses over, I'm back in going up. Okay, going for that long. I have been trained to use 1K, 3K, and 9K3 at tick charts. Yeah, John, if it works for you, awesome, right? So I used to use 233, 610, which is what I'm on now, and 1597. 233 is just too short of a time period. 610 for me is my sweet spot, and 1597 was too much, right? Because I am a scalper. You also have to know, what are you going for? Are you going for 1 point? Are you going for 10 points? It is a, you know, you have to have the correct probability, right? You have to have the correct proportion. You cannot be a scalper and look at a 4 or 5 hour chart. That's ridiculous. Scalping is in and out of trades within minutes. So why would you look for a 4 hour chart, right? So you have to be in the correct proportion. So if I'm going to be going for 1K, 3K, or 9K tick charts, that means I'm going for 3 or 4 points. So my targets are much bigger. I'm not a scalper anymore. I'm looking for that longer haul, maybe 30 minutes to an hour or even 3 hour holds, right? So again, it's purely proportionate. So if it works for you, super. This is what works for me, right? So it's all about what works for you, okay? So again, this is what my charts look like. It all is what works for the person, right? What really helps you. Okay, so let's get back into the presentation. Now, you guys have everything you need to take action, right? Everything. We have the YouTube videos, we have all these different trade chat rooms, all this going on. It's pretty much a lot of noise, right? The bottom line is, how do you know that you're doing it right? How do you know you're doing it right? Right? You're probably, some of you might not be feeling that you're consistent enough, you're struggling. How? Who's telling you if you're in or not, if you're doing it correctly, right? Just because you're watching a video of somebody, how do you know if you're actually following what they're doing, right? Look, all of this is great, but the real question you're probably asking is, how do I get really started? Like, how do I really get started? And this isn't only for beginners, right? This is also for seasoned traders who have been trading, but still are losing money. So I get asked this all the time. What can I do to turn this around and become more profitable and consistent at it? And a lot of times it's lacking the full understanding of the basics, right? It's like getting into the car and not fully knowing where that accelerator and where that brake is, because you're sitting with that driver, you know, like when you're doing driver's ed and you have somebody sitting next to you and they could press on a pedal to stop you. You never actually learn where any of that is and to do it on your own, right? And interestingly enough, if you've never been in a car and you sit down there for the first time and somebody tells you put on your safety belt, you might not even know what that is, right? Yeah, for us now, for sure, we know what it is, but not if you've never used it, right? It's the same thing. How can you know what it is if you've never used it? Look, my own sad truth is I've spent over $20,000 on trainings. I've done it all: mentors, workshops, retreats, seminars, trade rooms, you name it, over 20,000. And yet I was still totally struggling because I was losing money. I never knew the basics. I never understood that I was literally putting in windows without any walls and they were constantly crashing. And the last thing I did was I ended up losing almost $4,000 in 5 minutes. This was after 2 years, right? Almost lost that much. I was devastated, defeated, and I ended up quitting. I walked away. This was like 7 years ago. I just walked away because I couldn't do it. However, we all know this, right? We all get bit by the trading bug. Let's face it. I've been there. You've been there. We've all been here. That's why we're still here. We are bit by the trading bug and it never truly stops itching, right? And why is that? Because deep down inside, we know that we can do it. We know that we could do it deep down inside. So I decided to come back and get back to the basics. You know, when in doubt, go back to the basics. I don't know if you guys have ever heard of Coach John Wooden. He was literally he was the legacy for basketball. He had 81 wins in a row. He had 10 NCAA wins. I mean, this guy was one of the greatest. And all of his players were superstars, absolute superstars. But you know what? Every time a new season began, he sat down with them and he started from the basics. How to tie your shoe, how to roll up your sock, how to dribble a ball. If you're on that court and you have the greatest strategies and you know everything, but if you've got a blister or your shoe is untied and you trip, guess what? You're out of the game. So if you don't have your basics in place, you are out of the game. Doesn't matter what everything else you know if you don't have the basics. So for today, I have a super special offer only for participants. Nobody else is going to get this. Nobody at all. Just you guys. I have what's in my introductory course. I created it and it's called the Bootcamp for Day Trading, where I go through all of these basics with you. This is the next step. Either it's your very first step or your next step. This is the step. This is what you get in the course. First of all, understanding and simplifying the day trading process. If you don't have a platform or if you want to try a new one, I actually have a full platform setup tutorial. It took me over 5 months to figure out how to use my own platforms, and it was a waste of time. You could do it in 30 minutes, and I show you really quick. That's all part of the course. Dissecting markets, uptrends, sideways, really understanding them, understanding those magic telltale signs, reversals, divergences, everything. Understanding the defensive zones, the reversal patterns, spotting the areas, market shifts. Because if you don't know this, how are you going to get into a good trade, right? And mastering those breakouts, the breakout trades, understanding all of that. And you get unlimited access to the curriculum, which is priceless. All of this is worth $1,600, the value of this. All of this, the pre-quil frameworks, the tutorials, the market anatomies, defense zone strategies, valued at $1,600. Now, I have students from all over the world. So this is not only for, Europe or US. I'm talking Australia, Dubai, Emirates, New Zealand, South America, even in Africa. I have quite a few students. And here are some of my students. I just finished boot camp and feedback of homework is invaluable. Best money I ever spent. Course is amazing. I've now moved on to stage 2, fully immersing myself. Marina is an amazing teacher. I'm a stay-at-home mom, and I feel like I'm really catching on, non-techie, non-math person. So I want to share something really, really important with you. Again, back to that thing. How do you know you're doing it right? So without a good coach, without somebody to mentor you, you cannot move to the second step, right? I am offering in this course 1 month, 30 days, one-on-one, unlimited mentorship coaching with me, one-on-one. And on top of that, I have a live trade chat room where, again, you sit with me. It is not for anybody. Like, there's no moderators. It's me. And again, it's me live going over the charts, checking out where the trades are for you to fully understand, not for me to tell you this is where you go. You're implementing what you are learning. It is not just this is where it is, go for that trade. No, it's understanding why it happens. All of this is at value of $2,600, but special price for only the people who are here today, $97. One-time payment, no other payments. Go here right now, bootcamp4daytrading.com, bootcamp4daytrading.com. This is where you guys will get it all, $97. Again, all participants, normally I charge $297 for this course. For today, it's $97, 66% off, bootcamp4daytrading.com. But here's the thing, guys. Because of the mentorship, I'm only able to take on 25 students. Only 25 students I could work with, right? So get on it right now. This is where you guys are going to see $97 bootcamp for day trading. And you can actually start with a payment plan if you want for $59 2 times right now. So let's go here, right here, bootcamp4daytrading.com. Let me know, guys, if you have any questions at all. And again, you get me for 30 days, unlimited coaching, mentorship, and you get to be in the live trade chat room where it's me again, working with you live, unlimited time there as long as you guys need. So go for it. Bootcamp4daytrading.com. And I'm very excited to have you guys in the course with me and really taking your trading to the next level. Thank you, Anna, so much for having me. And thank you, everybody, for being here. I really, really appreciate you taking your time today.
There we go. Now, can everybody see it? Give me a Y or a yes, please. All right, I'm going to assume that you can see it. So I'm going to talk about discipline and a proven strategy today. I'm going to stop that. Without a proven strategy, you can't win. You can't make profits if it's not proven, in my way of thinking about things. Discipline is an easy part of the question when and if you have a proven strategy. So I've been trading for more than 40 years, and I'll tell you a little bit about myself. But first, let me show you how I trade. I trade the S&P 500 futures, 1 minute and 5 minute charts, and long-term stock holdings, a week or more, sometimes longer than that, and a little bit of cryptocurrencies. Speaking of which, there's cryptocurrencies, Bitcoin last night, and you'll see where this vertical line is. That's where my strategy predicted it would go short. So this is the kind of insights you can get for free by signing up for my free Sunday night sunny side of the street. Just click on this link, and you can download the presentation later. Click on the link and sign up for free. It was in the email I sent out, and you can email me if you can't find it, or you can click on the green thing above there. So a quick overview. I've been #1 trader twice, rated by Stark Research. Rourke International was my trading company. And that was just trading the S&P 500. It wasn't options. So I have 3 degrees in mathematics and a little degree in photography, which is my hobby. I've been programming for 52 years. I've been trading for 40. I was a systems programmer for Lockheed. I founded a little company called ISCO, which did computer graphics software that most people have heard of, Harvard Graphics. I retired when I was 30, and I gave my millions to money managers, which is a bad idea. It took them 3 weeks to lose $75,000, and I took my money back because I figured I could do that poorly on my own. So I taught myself to read through trading 117 books on trading and economy and everything I could to arm myself with the knowledge to begin trading this thing. I did not enter a single trade for the first year of watching the market. I just watched every day from 5:20 in the morning because I was looking at bonds as well. And I'm in California. So looking at the time I started, there was no intraday data. So you could only look at daily data, and pretty much the only thing you could do is read Investor's Business Daily and get your prices from there and chart them. I charted them by hand on a piece of graph paper. And then I created a magazine called Traders Catalog and Resource Guide. It was a monthly magazine for 8 years. I've written 5 best-selling books. Here they are. And I wrote Going Vegan for Linda Blair. And now I'm working on Grading the Gurus. I write articles for all the magazines. And I'll have a new one coming out in Stocks and Commodities. And I just had a new one come out in Trader's World. So here are my books. I try to make them look like they're simple enough for anybody to use. Using Easy Language 9.x, I wrote with Miri Ruggiero. It's for sale on my website at lower than you can get it on Amazon. And here's the cover of my Trader's Catalog and Resource Guide. I've been in the top 10 consultants and the top 10 courses and seminars in technical analysis of Stocks and Commodities magazine. As I told you already, I was top trader rated by Stark Research, and I belong to some of the clubs around and organizations. So there, I was the top 10 consultants from Stocks and Commodities magazine. I was number 3 at that. And then you can look at my website and see what other people say about me and about what I do. So you can come back to this slide. And this thing on my website goes pages and pages and pages, so you can see what other people think. And yes, there are some controversial comments on there too. So this is my Sunny Bands with the green and teal lines that surround price action. And on the bottom is my DMA histogram, dynamic moving average histogram. And I'll tell you how that works in just a little bit. These are the 2 indicators I use. And I programmed them both. And I did that because I found very early that whipsaw kills all your profits. So I put my math to work to find out how to avoid whipsaw. I used the DMA histogram. And next, I always put my Fibonacci retracements and projections on my screen and attractors, and I'll tell you what those are in a minute. I do not use news, no reports, no fundamentals, no newsletter gurus, only math. So let's go back 1 slide and look at the Fibonacci chart with the Sunny Bands. I drew this line from down here where it says 100% up to here at 0%. That's all that was evident at the time, was just this much of the curve. And I want to know where it was going to go. So I drew the fib lines as showing the support. And what I was really looking for is, where is the market going? And I'll see on this next chart, it perfectly highlighted the current top, from which the Dow is moving slowly down. Nothing like a crash, but slowly down. And I expect it to go down to the purple and gold lines in the middle of my Sunny Bands, which is my DMA, dynamic moving average. And that vertical line that just came up shows you where I stopped on the calculating the Fibonacci lines. It's amazing how the Fibonacci lines just perfectly show you support and resistance all along the way. And that top line is up 150% from the bottom, and it's right where the market was when I looked at that then top at 34,221. On my Facebook page, Dow was at all-time highs, and I predicted a correction. It didn't come as sharply as I expected, but it's been a nice sideways correction. I was a little bit early, but it continued to make higher highs, and the correction came nevertheless. Yesterday, we exceeded the predictive low, my predicted low of 33,563, and we went on down to 33,473. So I don't think the correction is going to be deep. I do think it is going to stop around this area. Here's my Facebook page. If you want to go in there, I post predictions every time I see a change in the market. So you might want to take a peek at my Facebook page. It's just Sunny J. Harris. So you go to the Facebook, and there's a link if you want to go to the Facebook page, or you can just go to Facebook, I'm sorry, and search for Sunny Harris. You can also opt into my Sunday night sunny side of the street. Click here or go to my website. In here, I show my charts. The first chart I show is a Vantage Points prediction for tomorrow, and which would be Monday because it comes out on Sunday afternoon or Sunday evenings. I've called for rising markets when everyone else was ready for a crash, and I've called for corrections when everyone else was buying. My latest prediction was posted on April 21st, and I said, looks like the resistance on the Dow is holding. Market has turned down from 34,102 level slightly. I have several tools pointing to retracement of 32,953. Keep your powder dry. And as I wrote this, the Dow was down 279 points from that prediction. So I realized early in trading the whipsaw kills all of the trading profits because markets trend 30% of the time and drift 70% of the time. Marinos mentioned that. It's during the drifting that most traders lose money. And the drifting comes, you can draw the attractors on higher highs and lower lows and double bottoms and double tops. But in my case, I use sophisticated math to create my dynamic moving average. And there's the kind of math I'm basically using my master's thesis. The dynamic moving average is magical in its ability to avoid whipsaw and thus reduce losses common to most traders. It has sophisticated mathematical formulas built in, which took me 3 solid years to develop. Yeah, I programmed it and then tested it. I programmed and tested it, and that went on for 3 years until I found exactly what I wanted to put on the charts to tell me when to trade. To display the sunny bands and all their magic, I add variable average true ranges, ATRs, to the sophistication of the DMA. Now, let's look at some other moving averages, and you'll see why I created my dynamic moving average. Here we have simple moving averages, and I've overlaid this so you can see them as they transition. Now look at the exponential moving averages. See how that varies? And then you can try weighting moving averages. You can try triangular moving averages. See, they all tell you something a little bit different. Volume weighted moving averages, adaptive moving averages. This, I think, is the one it's in TradeStation just freely. I think this is the one by Perry Kaufman. And you can see this crossover would have you long this entire time. And mine's a little bit different than that. There's another thing called adaptive filter, and that shows you trends too. And then there's my DMA. So let's look at this DMA for just a few minutes here. And the question, what is true, informs all of my trading. And in fact, it informs all of my life. I ask what is true about everything I encounter or everything I think about. It's the way to form conclusion, and it's the way to create strategies. So what is true of my DMA? First, when the gold line's on top, the market's moving generally upward. You see the gold line's on top here, gold lines on top here. Right here, we have congestion where the purple line goes just briefly under the gold line. And here you can see the purple line on top. So you can see that that's a shorting opportunity. I also use the angle of this DMA line as one of my prognosticators. I will not trade when the angle is flat. Second, we can notice that when the DMA is flat, so is the market. So it's not good to trade unless you're scalping and you can get $100 at a time out of a scalp on the E-mini. So then I added bands to my DMA. Excuse me a second. Nope, not Bollinger Bands. That's what Bollinger Bands look like, and you compare them to my DMA there. And they're not Keltner channels, which you can see there, and compare it to my DMA. So the definition of the Sunny Bands is my DMA is in the center. It highlights the market direction, and that's the purple and gold lines. Then I add a 1.2 average true range band on either side of the DMA and a 2.0 ATR band on either side. So I've got two sets of bands, one at 1.2 and one at 2. So let's take a look again. So this inner teal line is at 1.2, and you can see that it contains most of the price action. When you get a run, like over here it says to go long, and you've got this long run like that, that DMA will stay with it and broaden out so that it doesn't whipsaw during market consolidation. The green line on both sides is 2.0 ATRs away from the dynamic moving average. And the top one's calculated from whatever's on top, and the bottom one is calculated from whatever's on the bottom. So if the gold's on top, these ATRs are computed off the gold one. Likewise, if the purple were on top, then the ATRs would be computed from the purple. And then this in the center is the DMA. It's a little confusing when you first see it, but I'm happy to give 7-day trials to anybody that has TradeStation or multi-charts. And it's free, of course, and I instruct you exactly how to use it. I'll even sit with you while you trade for a while. Here's what I look at every day. This is my main monitor. And you can see I have my DMAH, the histogram, on the bottom of this chart. It's the gold and red you see there. Down here on the 1 minute, you can see it's purple and green. I'll explain those to you later. And I have blue dots and red dots. That's my PHW indicator pointing out the ideal turning points. And then, of course, I have my trading window right there ready to go. And I, unlike Marina, I buy market, sell market every time. So what's true of Sunny Bands? Well, it calls the direction of the market early. It allows me to get in nearer to the tops and bottoms, and I can trade it on any market and any time frame. And as I said, I'll show you exactly how I trade with them before the end of the presentation. Before that, what makes me think I have the credentials to teach you this stuff? Oh, I'm sorry. I should have taken that one line out. I gave you the credentials already. But I did promise in the email that I sent out that I would show you a perfect system. This thing is 100% correct. There are no losing trades. So let's see the chart, and then I'll show you the code. Sorry about the phone. This is the chart, and you can see, and it's not using the DMA. I just keep it on everything. So you can see it buys here, sells there. It's taking little bitty trades, see, little bitty trades, and it's promulgated off of what day you want to buy on. So Monday, Tuesday, Wednesday, Thursday, Friday. And this thing makes a fair amount of money. In 3 years, almost $23,000 on the S&P 500 on a daily chart. So that's real good, but we can do better. Here's the easy language code, which you can also use in multi-charts. Let me go back. How do I go back one? There, so you can see the code. Now, I would suggest if you're interested in this code that you go ahead and do a little screen capture there. I'll leave it on just for a couple of more seconds. Okay. If you want it, give me a call and I'll give that to you if you didn't get it. The nice thing about this is you can optimize it. You can optimize both input values, the buy day and the buy target. So I'm going to run a real quick optimization here for you on that. It tries it on every day. And so 0 through 6, 0 is Sunday, 6 is Saturday. And it tries it from no buy target to $1,000 in steps of 100. So here's the optimization we're going to run. And the report comes out with $49,000 as opposed to $23,000. So this is, like I say, a perfect system. And there's the equity curve. Nothing wrong with that. That's pretty darn good. By proving your system, I mean that you do a lot of experimentation and you keep very detailed logs. I spent 18 months researching strategies, what could possibly work, MACD, all the moving averages, everything, and kept detailed scientific logs so I could look back and tell, which worked, which didn't, and what was wrong with the ones that didn't work, what could be improved. You want to find good results without curve fitting. That's important. In my book, Trading 101, Getting Down to Business, I outline very carefully the techniques that I use to do research and to prove my system. You have to first know that your mathematical expectation is positive. Mathematical expectation negative means you're going to lose money, and positive, the higher the positive value, the more likely you are to actually make profit. I got this idea from Ralph Vince, who's a brilliant mathematician. They changed his name to Vince when they came over on Ellis Island, and his name was Da Vinci. And this guy is brilliant like Da Vinci. The next thing you have to do is calculate your CPC index, which is stands for cardinal profitability constructs, and it is the formula. I'll give you the formula. Just email me. I'll give you the formula because it's really important that you have a CPC index of 1.2 or greater before you trade a system. So the first thing I put on any chart I look at are attractors. I coined the term to describe all kinds of support and resistance, including moving averages and MACD and horizontal lines and all kinds of things. It's where price tends to revert to the mean. Next I put on my chart is my Sunny Bands, which is based on my DMA. And here are some attractors. Here's one that I've drawn from out to the left, and you can see price hits it and hits it and hits it and bounces. And likewise, Fibonacci lines are attractors, are attractors. With the Sunny Bands, you can see I've also got some attractors put in there to show where price was and where price is going. And what I do with these Sunny Bands is when it comes down to either the inner or the outer band and goes back up, then I go long right down here, right at the inner band. When it goes up, it comes down on a red candle like this into the Sunny Bands, I go short. So it's over and over and over again, looking at piercing the bands and rising and then piercing the other band. It just goes back and forth all day long. The DMA crossover is the macro clue. And by that, I mean, you can tell which direction the market's going in general, but it's not enough. It's not early enough for me. It's too late. So that's when I created my Sunny Bands, which is much faster. And then I created the DMA histogram just recently, and it's even more precise than Sunny Bands. And you can see down here at the bottom, that didn't work. Down here at the bottom, you can see my DMA histogram. And you can see when gold turns to red, it's time to go short. When red turns to gold, it's time to go long. So that gets us in a little faster even than the Sunny Bands. Here I've marked the turns on the dynamic histogram. Down at the bottom, you can see the vertical lines going up, showing the kind of trades that I take. And that's all there is to it. I look at detractors. Oh, I also look at Vantage Point, which is an artificial intelligence software that predicts tomorrow's values. And I do take a look at that every day to make sure. And I also put it in my website and in my Sunny Side of the Street newsletter. So you can see the Vantage Point prediction for free. And then more than likely, you're going to want to buy Vantage Point. So I study the DMA and the Sunny Bands. I trade the E-mini on a 1 minute and 5 minute charts, and I'll show you how I combine them on one chart. And I trade many times a day. With equities, though, I buy and hold for weeks to months. With Sunny Bands and my DMA, on a 1 minute chart, I add the 5 minute chart to show me the long-term trends. And this little move is tricky, so you can click on this link and go to my YouTube channel. So I put 2 Sunny Bands with 2 data streams on one chart. And there's the YouTube page. So here we have it. You can see the dark green lines are the inner Sunny, or the faster Sunny Bands. So that's the 1 minute chart. And the lime green is the 5 minute Sunny Band. So I've got 2 streams of data, only one of them showing. You can see they're at the very bottom of the chart. But the same applies with the hitting the lower bands and the upper bands. But the cool thing about this is the 1 minute is going down and hitting the 5 minute Sunny Bands and going back up and hitting 5 minute Sunny Bands. So you can really tell the fractal nature of the markets when you use 2 Sunny Bands on it. And of course, it also works on longer time frames. There it is on the Dow, on the daily Dow. And it works beautiful on any time frame, on any symbol. There's Google. And the last piece of the puzzle is that Vantage Point that I told you about. Every night before I put my trading tools away and go to bed, I consult Vantage Point to get a clue where the market might go tomorrow. It's a nice confirmation. The gray bar on the right of the Vantage Point chart shows tomorrow's predicted value. You can see this, see the gray bar on the right, all the way to the right. You can also see at the bottom of the chart that their moving averages have, the teal one has crossed and gone back over the 0 line. The other 2 are pointing downward. So they are looking for a downward market today. And I haven't looked at it to see what it's actually doing. In summary, my steps are: I look at Vantage Point, I draw attractors, I place the Sunny Bands on the chart, I put my DMA histogram on the charts, and then I read the signals, take the trades, and make money. Can't be any more disciplined than that. I'm reprogramming my moneymentor.com website. It's been up for a long time, and I'm going to release it in the end of July. It's been active since 1995. I was one of the first websites on the internet, but it seriously needs an overhaul. So here's what you're going to see me do. If you go to the website, you'll be amazed how many trading tools there are available there. And I've got over 1,000 pages on Money Mentor. So here's what it looks like right now. This is what I'm calling the old one. And here's the new one. This is the redesign. Okay, I have products. And they were all developed for my own trading, not for you. I didn't program these things to sell to you. I programmed them because I needed them for my own trading. And I do make them available to you, and I do show you exactly how I use them. And if you click there, you can look at all my products. I'll also issue a PDF of this presentation. So we'll have a recording and a PDF. And if you want me to email it to you, just send me an email, let me know. And I don't hold anything back. I tell you exactly what I do. I don't, it's no sleight of hand. It's no, this is what I do and you won't ever understand it once you're off the telephone from me. That's not right. Here's the list of products that I have on my Money Mentor site. But today, anybody that orders before the end of today will give you 40% off of all my indicators and strategies, anything you want to buy except the books. Or if you order before the end of the month, it'll be 30% off. So of course your best savings to do it today. And it includes consulting and mentoring time. And if you want a free 7-day trial of anything, call me or email me.
Good afternoon, everybody. Good evening if you're in Europe, and good morning if you are in the West Coast. How's everybody doing? Do we have audio and video? Please let me know. Today I will talk about volume profile for futures and Forex and how to benefit from it, how to use it in a simple way, or how to simplify it. It is an intimidating subject because first of all, trading is not easy. Second, using volume in general is something that's been intimidating for most traders because they got used to using typical technical indicators. Can you all hear me? Anna, can you confirm, please?
The mic is good. The screen looks good to me.
Excellent. Very good. Let me just get my stuff ready too. It happened quick. And see now. I need to remove something because it keeps coming up. The audio indicator that I have, unless I freeze my, disconnect. Just give me a second, folks. Let me disconnect. Okay, I disconnected my CR chart. So I'm good now. Okay, so welcome everybody. It's Simon, thetraderinstitute.com. Volume profile simplified for futures and Forex. There is a very important information today in this webinar. But just in case, because I cannot simplify it enough and I cannot explain it in the next 45 minutes or so, it is important that you visit us on the website. This is the website, thetraderinstitute.com, and we have 2 weeks trial. Like, you just click there, 2 weeks trial. I have a very important video. I think it's about 10 minutes or so, how to use the trial in your favor, how to benefit from it. Because in the trial, we have 3 days a week that you can get a live trade room with me. And we have all these channels for trade calls, which I will maybe use today for my presentation too, to show you how powerful our system is. Indices, like this is the YM, the NASDAQ, the RTY, the E-mini S&P. I also look at the same instruments, but in the CFDs, which is the spot equivalent. For example, look at ES, E-mini S&P. I have equivalent to it in the spot market. We call it SPX 500. So that is for both this channel. Usually people who trade CFDs, they will take my same call, just see the difference in the price, and they just execute the trades. And I have a channel for oil, which we've been trading yesterday and today successfully. And I have a channel for metals, which is mostly gold, and currencies. I have some currency trades, both currencies in the futures and the Forex market. Same thing with metals. Metal, you can trade gold and silver in the futures market and also in the spot market. Same thing with oil. You can do oil spot and you can do oil futures. And I have this free channel. Welcome to TTI. It's free. You don't have to go through a trial. Just join it. If you go to the website, okay. I'm sorry, not this one. Yeah, this is the website actually. Where is it? Sorry about this. I will show you another spot. This is the website, and if you go to the top to the website front page or any page, if you scroll to the bottom, click on the blue. It says free update. If you click on it, you will get to Telegram. So you can. I don't need to install it. I have it. So this will give you access to our free Welcome to TTI channel. Through that, you can see our progress. You can inquire. You can private message us. You know, inquire, and you can also get updates, and also you can get trials. All right. So I have a lot of information. Also, one important thing before I start my actual presentation: if you go to About Us, there is education page, which is right here. Education page holds a number of educational videos that I really want you to benefit from. I want you to go through them, please. Very important to go through them. Okay, just give me a second. Very important to go through them because I'm giving you free education. Especially, let's say, video number 3. The video number 4 is very important. It's about psychology, secrets of swing trades, etc. And our promise is always to give you 1,000 ticks or pips per month with our trade calls. And you will see how easy it is to achieve that. Now, I started in 2001 with Forex, and then soon after I switched to futures. I kept Forex too. I still do Forex. In 2005, I spent 6 months full-time looking at and understanding the volume, the power of these numbers on the bid and ask ladder. Okay, very, very important to anybody who trades. These are very important. These are very important numbers. Now, that being said, since then we switched to we simplified it. We don't look at the bid and ask ladder. I simplified it into a very simple technique, very simple indicator that we use on Sierra charts. Okay. I developed many things throughout my progress. I minimized it now into very simple couple of indicators that you look at, and you will know the direction of the market. Let me explain to you what do I look at. Of course, a lot of you, the purpose of this webinar is to show you that technical indicators are overrated. A lot of us, we trade support and resistance using indicators, Fibonacci's, MACD's, RSI's, name it. They all work, but there's always something missing. Like you don't know where your stop loss is. You don't know where the exact entry is. It will hesitate. It will take your price multiple times stops before it moves in your favor. You don't know. With volume, it's a different story. Okay. Like John says, one of my oldest members says, when you are trading and watching your normal charts with lagging indicators, often the market will reach a point where it does something you just can't understand or predict, right? So using volume profile the way Simon does gives you a window to otherwise hidden current that drives the markets. Quit reacting to the market. Okay, and get the edge and learn how to use volume profile. I don't react to the market. I'm a proactive trader. I anticipate the market. It is important to anticipate the market before you get into the trade. Confirm and then execute. Before I start, again, I will explain things. We have time. Luckily, you know, I have I had 10 minutes extra, which is good. Today, this is the indices channel. Today is the 20th. I'll show you how powerful this is. First thing in the morning, today this 20th, okay? First thing in the morning, I said, this is at 8:58 a.m. I said RTY, the Russell is going to reach these two targets. Look at this. This is 8:58 a.m. before 9 a.m. The Russell is going to reach these two targets. And I said, the NASDAQ is going to reach this target. I'm talking about 1,000 ticks move. You see this? 13480 area. And I said the YM, the ES is going to reach this target, these two targets. Okay, and I also said the YM is going to reach these two targets if this area breaks. Folks, unbelievable, after a while, look at 11:34 a.m. Look where the NASDAQ hit. And it's been drifting down since then. Actually, I called it short after. Right? I'm not making this up. It's right here. Look how the YM worked. You see this? ES, first target reached. I don't know where it is. Actually, it broke the first target too. You see this? I'm just showing you before and after from just today. So anticipating is very important. Confirmation is more important, and then execution. ACE. Okay, and let me explain. Let me go to the charts and let me start explaining. Okay. Let's look at something like this. Let's go to the 60-minute chart. Let's go to the NASDAQ, was it? NASDAQ, yeah, 60-minute chart, NASDAQ. Or what was it? YM. Doesn't matter. Doesn't matter. Today on the NASDAQ, since yesterday, I'm long on the NASDAQ. Where is it? I grabbed yesterday was the 19th here. Since here. Okay, let me be more specific. Today I said the NASDAQ is going to go up to these levels. That was before 9 a.m. 2 hours after, 2.5 hours after, 3 hours after it reached the target. How do I know this? Okay, when I look at these volume profiles, pay attention carefully to what I'm doing. Look how I can smoothen the edge. Okay, enlarge it, and then minimize it. Look at that, and also smoothen the edges. You see how the edges are getting smooth, almost rounded. You see that? And that also show me a few things. You see different colors. Do you see different edges? These all mean different things. Some of them are continuation zones. If I grab this, some of them are continuation zones. We call them C, for example, continuation. And some of them are rejection zones. It's not as simple as just rejection and continuation. It has to do with also a zone. As you noticed, from for example, a level from here, where my line was, you see this line all the way to this level, which I marked it on my charts 3 hours before it happened. I said we have a long on the NASDAQ. Do you see what happened? It actually went up all the way to the top. This whole zone, it's a continuation zone. That's being said, how did I know? Of course, the NASDAQ yesterday, I called it long from the very bottom, from here. You see this? From this, I called it long from here. We exited here. It came back down, and I didn't get a chance to call it again until this morning, long. How did I know that? It's because simply, if you look at, let me erase these. If you look at the magenta line at the bottom, remember we talked about confirmation. Confirmation. Okay, that's exactly what I mean by confirmation. Confirmation is something that you cannot trade without it. Okay, see, that was my confirmation. If you look at the same charts, but on the CFDs market, it gives you the same. Now, let me be more specific and also simpler. Okay, let me be simpler. So, and I will come back to the same charts. I want you to understand exactly what I mean by volume profile. You noticed on the volume profile, on the right-hand side, you had levels like this, whatever. This is your volume profile, VP. Now, let me give an example of how most typical traders trade versus how you should be trading, honestly, how you should be trading after looking at volume profile. Volume profile gives you, as I said, continuation, C, and rejections. Let's assume that you are looking for a long, okay? The market went up, all the way up, it came down for a retracement, and you're looking for a long. Now, you're looking for a long, let's assume that it's not there yet. the retracement is not there yet. So you're looking for a long from, let's say you are using simplest things, Fibonacci. You have a level here, Fibonacci. You have another level here, Fibonacci, and you have a level here, that's Fibonacci. All these levels are something that you depend on because you're a Fibonacci trader, for example. The market comes down here, okay, and you take it long. It actually comes right through your stop loss. Stops you out. It comes back again here. You take it again, you say this is 50%. This is important. You take it long, it stops you out here, and then you stopped out, and then goes in your favor. You say, oh my God, 50% held. It just poked a little bit lower. So you take it long again. You stop below the previous stop, previous low. That's how technical traders think. It's a wave, so my stop loss will be below this. You take it long, it goes 2 ticks in your favor, you're happy, and it comes back right down, kicks you out. And now it touches the third one, or it doesn't touch it. You just don't want to trade anymore. You have 3 stops, you're done for the day. You're sour, you don't feel it, or you will just take a long without thinking. You will say, okay, I will just use my entire account as a stop loss. Okay. You can't do that. You have to be logical about it. This is same example. Let me show you how I think about it and how I look at it. With this volume profile on the right hand side, which I will now remove because I don't need you to get confused with this, because I will make it simpler to understand it. This volume profile on the right hand side gives me levels of continuation. For example, in the previous moves that happened, we have a continuation here, right? Continuation zone here, and another continuation zone here, okay? And then another continuation zone right here. These all are continuation zones, continuation, continuation, continuation. And then in between, you see here, I'll mark it as red, you will have rejection. Rejection is here, rejection is here. Notice this rejection is a zone, is a square. See this? This is rejection. So this is something that you should be looking at. Now the market is coming down. Now the first trade that you took, I would have not taken it because it's retracing down through a continuation zone. First, I can see it's a continuation. It might continue anywhere down all the way to this rejection. That's first thing. Second, if I take my trade from here, where do you think I have a stop? I don't have a stop. Therefore, when I call my trades, pay attention to this very, very carefully. Today, oil, we made about a very nice move. Today, oil. Today is the 19th, right? Oil came back to the same entry of yesterday's. CL stops remain at 62. Folks, CL, first thing I told my students, my stop loss is at 62. Imagine if you know your stop loss ahead of time. What are you going to do? So looking at this, my stop loss, I know my worst case scenario stop loss is at where the green line is, right here. Why is my stop loss here? Because if we poke through this resistance or rejection levels, I'm sorry, which is at support at this time, it's going to continue all the way down. So if my stop loss here, why the hell I want to trade here? This whole level, this whole area is risky. You understand? So what I would do, I would wait it out. It might go up. I don't care. To hell with it. I don't care. It's because look at my stop loss. Comes back down, touches the other level that you think is good. I think it's good too. But my stop loss is still down here. So why don't I wait for it to come back down lower to the rejection zone right here? Okay, you understand? This is where I see, this is what I can teach you exactly how to pick those levels. So now I want to go long here. Do you think I'm going long yet? Not yet. Why is that? I cannot go long yet. Why is that? Because remember, my strategy is anticipate, confirm, and then execute. What do you think I'm looking for now? Let me go back. I'm looking for confirmation, folks. And confirmation, if you look carefully, today's crude, I knew it was long because of this. Look at the magenta line. Look at the magenta line. Look at the magenta lines that created for pushing the market up in my favor. Look, we took it long twice. 1, 2. Both of them gave us a tremendous amount of profit. But again, the market is crazy. As long as you take profits and move your stops, you cannot trust the market. You know, you have to move your stops accordingly. And look at the NASDAQ. Look at the NASDAQ. I called this yesterday about 400 ticks profit. Look where the magenta line was. I called it here. Sorry, here yesterday from this bottom. And it continued all the way up. If you look at the NASDAQ futures market, look at the confirmations I got. Look at the confirmations I got. Look. So let's go back. What am I waiting for? Here, I should see something like this. Remember we talked about the tape? The numbers give you buying and selling. The numbers are big and the dark colors, whatever. I minimized all that. I made it very visual and very simple indicator. Okay? Sorry. Very simple indicator. And that indicator, we call it the SAL indicator. And if you see, for example, the SAL indicators gives me these magenta lines. You see, those are where the hidden volume, whether it's in my favor or it's against me, at least I know if it's against me. Whether it's in my favor, I know it's in my favor. The reason why I knew the NASDAQ was going up all the way to this price is because of this. Look at the magenta line. That was a target. We call them attraction levels. But these attraction levels can work as confirmation or levels that you could use. So what I'm waiting for magenta lines to show up. Let me color them yellow here. Oh, sorry, orange. So once I see buyers firing up here, this is where I would like to go in long, and I will type it. I will type it. Look at this on oil. Today. 1 second. CL is a long 62.60 or better. I said 62.60 or better. You see the price exactly is there. Now, do I need to bring the stop loss again? My stop loss is already determined at 851. I said my stop loss is 851. I called this trade at 1019. Folks, if I go back at, let's say the market was hold on, let me grab something. The crude was here. My stop loss is here. I said my stop loss is 62. This is your 62. So after a long period of time, let's say an hour and a half, the crude came down to this level, 62.60 or better. So I have this whole price. You see this? I said it's a level. This whole area is entry. So if it comes to 62.60, 62.55, 59, 58, it's all good entries. My stop loss is 62. We took first target. Now going back to the same thing, and now my first target. How do I determine my first target? This is very interesting. How do I determine my first target? I'll show you. Erase. My first target. Remember we talked about continuation and rejection. These continuation and rejection zones that I drew in front of you, these are stemming from a bigger frame. When I break down this to a smaller frame, inside this continuation and inside these zones, I will have smaller zones. Let's color them brown. Zones, and these zones will be exactly like the bigger zones, but continuation and rejection. So it sees these squares are continuation, the in between are rejection. So now you know it's easy to do this. It's not hard, but it needs practice, and it needs learning. I have a big video of in the members area for you to learn, and you have me, and I preach this 3 days a week. So when I take this long, I want to see my first target to be at the first rejection. We call it hiccup. Hiccup against you. So if my first hiccup is here, right? I'm taking my first target. How many contracts do I trade? Or I call my trades on how many contracts, right? That's important to know. We take trades on 3 contracts. First target, we call it T1. That's my strategy. You can learn it and you can advance. You can do something else with it. T1 is on 2 contracts. So my first target, for example, on this crude was 20 ticks, because I also said for the crude, take T1 as 62.80. So entry is at 60, first target is 80. It was not random at all. It was because I had a hiccup in front of me. So I took 20 ticks profit. 20 ticks times 2, that is 40 ticks. On my T1, I took 40 ticks. So imagine if the runner goes up a little bit more and comes back, takes my stop loss. I made 40 ticks. My stop loss was 15 ticks. I still made profits, folks, right? Because my stop loss is on 1 contract. So that's the idea. Although the crude went up about 60, 70 ticks, and then eventually I said, if we touch this price, move the stop loss to 62.30, and then I said move the stop loss to 62, and then I said move the stop loss to entry. You understand? So I follow that. It's very important. Let me show you something else that is as powerful. Where do we have the markets now? I'm looking at the NASDAQ, and we're looking at the S&P as well, RTY, because I have charts all over the place. Please, if you have any questions about this, let me know. Now we move up. The market goes up. What do you think I'm doing with my stop loss? Simply, I will take it. I will say your next stop will be here, right? Your next stop will be here. Why? Not because I just want to lock. The stop loss has to be smart. We call them smart stops. Okay? Nothing is random. If you want to catch this runner, you have to use the same methodology. Some of the students will take profits halfway, midway, because they don't have the stamina to hold it. Everybody's different in terms of how they hold their trades. 1 second. So everybody's different. Let me give you an example of yesterday. I had, got me 1 second. Let me see. This is the NASDAQ 15-minute, maybe 1987 tick chart. No. Yeah, maybe. No. Where is it? 1 day. Just give me a second. Let me find it, please. Oh, right here. Okay. This is from the 19th, yesterday. Yesterday trading, I had about 575 ticks in 1 day. Okay, mainly came from 1 trade, right? Now, when I say we like to give you 1,000 ticks and trade calls, I am not exaggerating. It's very simple. Let's go back and let me show you. This is indices, right? And let me. Okay. Look at the 19th of May, 9 a.m. As soon as I opened the live room, I said, NASDAQ big support 1297 to 12960, which is where the bottom, you see the line is? That's the support, exactly to the tick, right here. This is your support. And that was at 9 a.m. And then I said, NASDAQ, ignore this, because all of them went according. I'm just giving you one example. YM went exactly like I was expecting. ES went, RTY went. At 9/11, I said, I would like to see NASDAQ stop at 12950. 12950, folks, to be exact, is right here. You see my lower blue line? Let me remove the upper blue line. So this is the entry level. This is my stop loss, 12950. Exactly. This is at 9/11. I know my stop loss already. You get it? Hopefully you're following. This is very exciting. At 9/11, I said I want to see my stop loss to be at. This is my stop loss. At 9:15, 4 minutes after, I said NASDAQ long with stops at 12947. I chose initially 47, which was just below 50, because I wanted to avoid the NASDAQ moves fast. It pokes in and out, right? But then after 2 minutes, we moved it to 50. See that? It even didn't touch 50. So even if I had 50, it would have been safe. But I wanted to play it safe. I know the NASDAQ's personality. So take profit one at 12970. We took profit one. Profit one for me alone yesterday was 35 ticks. So 35 ticks times 2, that is 70 ticks. And then I said, I have a hiccup, move your stop, move your stop. Finally, I said, NASDAQ big resistance against us is this. NASDAQ move stop, then I locked in profit, and then I locked in more 100 ticks, then I locked in more profits, and then exiting NASDAQ at 300 ticks soon, and then after a few seconds, I said, NASDAQ out. 300 ticks was my runner on the NASDAQ. And again, it's a good thing because I usually keep it for more, but there was resistance against us, and the day was not good for me to keep a runner. So that trade alone, just one trade, gave me 370 ticks. When I promise I will give you 1,000 ticks in trade calls, first of all, these trade calls that I'm giving you are typed in front of you, timestamp. This is something you can get on your phone, right? So everything is right in front of you, right there. Then I did the YM, I did the RTY. I give also, and this is today. I showed you today. I was expecting from today. I was expecting the ES to the RTY to reach these levels. Can you read them? 2210, the higher one, and the lower one is 2202. And if you look at the Russell, look at the hourly, 2202 reached, and we still have to get to 22. Let me see where the Russell is now, because these charts are not, I mean, they don't have data now because of this noise that I was having. So, and if you look at NASDAQ, I said is going to reach 134 here, 80 area. You see this? You see just below 80, 13480. And if you look at the NASDAQ hourly chart, look where it hit. This was the arrow, same arrow. Look where it hit, 1380 here below. This was the actual level that I wanted to reach right here. And I called it short from the top here. We got a little bit, but then the hesitation stopped us out, but then now it's continued down from there. Do you see? Same area. I said I was looking at the ES. I said ES is going to reach 4130 and 4140. Look at ES. 3130 and 3140, and it actually went through them too. Okay, and finally I said on the YM we're going to get to 34090, this area, 34090, which is, if I look at the YM, we touched it. If you look at the 60-minute to be clear or 30-minute chart, right? This was my YM target. See this one right here. Okay, so this methodology works and it's very powerful. However, this is not, I'm not selling anything. So there's no sales involved today. What we offer, folks, let me show you some pictures from the past. I have students since these days, 2004, 5, and 6, and 7. This is in Ontario. I used to do webinars. This is me in Colorado, Denver, back in 2012. My screen is blacking out. Are we good? Are we back? Back to normal?
Yes.
Anna? Okay, good. Let me just close the charts. Okay, so I can have a nice end to the session. Just give me a second. Okay, this is from Las Vegas, right? Here, Las Vegas. Before that, I have Denver. Now, a few things I want you to pay attention to. When psychology is important to us, to me, for trading is important. That's why if you go to our website, I will show you a couple of things that I want you to pay attention to. Very important, given the fact I can get to my website now. Where is it? Here. Come on. Sorry about this. So on the website, I have multiple videos about the psychology of education. I will also try and show you something very important as well on the website. If you go to the website, if you like to get a trial, as I said earlier in this webinar, if you go to the 2 weeks trial, there is a video here that I made yesterday. This will show you how to benefit from the trial exactly. I want you to follow my lines. I want you to follow my signals. I want you to follow everything. You don't have to trade them, because if you miss them, you can also go back and time. Everything is time stamped, and you can go to your charts. I want you to sign up to all. If you're a trial member, please sign up to all channels. You will not benefit completely if you're just trading gold, for example. You're not going to benefit completely from my service if you're just trading the NASDAQ. You have to look at because if you're trading, why not trade all of them? Why not look at all of them? You don't have to trade them for now. Just look at them and see the power of what I do, okay? And it's right on the website. If you require trials, go to contact us, or just click here and you can contact sales or me or info. Anybody you want. We have to, make sure that you are a trader. We make sure that you will benefit from our system, and we can offer you that. I don't offer, again, if you look at the membership, I'm not selling anything today. Why? Because our membership, we can customize it according to your needs. The membership is very expensive for some. The special price now is $6,500. Again, this could be expensive for some, could be doable for some, depending on how. If you're trading a $5,000 account or $500 account, this is not even for you. If you're looking at trading 10 cents per tick or pip, this is not even for you. There's another package, $3,500. This is just for trade calls. I can give you my trade calls. You can enjoy the trades, whatever. You can also enjoy the room, but I'm not going to give you full access to the membership. All right. The membership will give you a lot of things. Let me just go to the membership and I'll show you what you get. I'm just looking at that. 1 second. Here, the full membership will give you access to all the videos in the members area, right? Which are level 1, level 2, level 3. It's a lot of videos. Level 3, for example, advanced market profile or volume profile. Look, crash course on volume profile. We have 6, 7 videos here. If you look at level 4, everything is detailed, like traps, escaping, what is a poke in, poke out, recorded training. We have a lot for scalping and also for long-term trading. It is very important that you pay attention and join us. When you join us as a trial member, I would expect you to have done your homework. Look at the website, then do your homework, look at everything, the good, the bad, and the ugly. And then the trial with the trial, I want you to have an open mind. Believe in what you see, okay? Not what you hear or what you feel, what you see. One of the main things in my trading success is that I always tell my members, I trade what I see. I don't trade what I feel. Why is that? For the past few days until yesterday, for example, the ES or the NASDAQ coming down, down, down. Let me change that to black. Coming down, down, down. Everybody says, oh, it's going to be a dump. It's going to go down. Finally, we got to a level, folks, that it was my rejection support, or I would say, let me just be more simple. It was my support level. Okay, it came here. So everybody was thinking it's going to go down, but not me, because I see my volume. I see the market makers, market movers, market manipulators are very clear in their direction. So why do I have to follow what I feel just because it's showing? No, I called it long, and I know where the market's going to hit. I gave you an example. I showed my students today where the market's going to hit, and they hit exactly, right? One thing we have for sure is we have a great relationship with our members. I have this channel, the elite members. I see this. People chatting, people sharing ideas, people sharing videos, people sharing trades. You see this? It's amazing. I'm very proud of them. I have 141 paid full members that are active with me. I have probably 500 that are not here active because maybe they trade on their own. You know, they can come and go. The membership that I offer, it's permanent, okay, unless you choose the annual one. And also, when you finish your trial, we do have a sales process that you can go through. We have discounts. For example, I have a really very low discount for the month of May. My sales manager is not available. He's coming in first week of June. So I'm doing the sales, and I don't have the stomach or the passion for the selling. So I'm offering a very low price. However, I'm not gonna touch pricing unless you try us out. You have to come through the trial. I don't sell anything unless I know it's for you, unless I know you will benefit from it. So send us an email, look at the website. If you go back to the education, okay, I have videos telling you that really making 1,000 ticks with me a month, it's really not hard. Patience is number one, okay? I don't chase. I don't get in if I don't know my stop loss. Yes, we will get stop outs, okay, but we already know where the stop loss is, okay? So that's my presentation. If anybody has questions, please go ahead, ask questions. Let me see where I can see the questions. Where are the questions? Just give me a second. Questions here. Okay. Questions, please. Yeah, we do offer plans if you're interested. but you know, you have to go through the trial, please. Any questions? And yes, do we do futures? I do Forex, for example. If you look at the currencies, I am looking for a long on, you see this? Oh, this is the USD CAD. I'm looking for a long on the USD CAD, which means you can do the CAD at that time on the future side, but short. They go opposite, right? Also, I look at USDC. Look at USD CAD. I'm looking for a long. I'm looking at, for example, USD Swiss franc. Yeah, we do have that too. Okay. Anything else? Okay, so request trials, please join us for trials. Anna, thank you so much. I am done, and all the best. Appreciate your hosting me.